Right, welcome back to the channel, Crypto Trend Trader. All right, let's get this thing started. Everything looking good. Excellent. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market update, our little look ahead for the week. Before we get started, I do want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Going to do our typical rundown, get started. We're going to run down, obviously, cryptocurrencies. We'll take a look at the traditional markets, index, basically tech, and then our commodities as well. A couple other just randoms in there. We'll basically just get started where we always do, and we can kind of take a look from there. Before we do jump into everything, though, I just wanted to basically, looking at the Bitcoin chart and everything, very predictable move that we've gotten here. We have gotten a series of lower lows on the daily, and right now when I'm looking at this little move up here, looks to me like essentially a gap close on the futures market. So I don't want to get too excited right now, but a couple of our shorter time frame indicators are indicating a potential uptrend, or at least temporary relief rally. How you doing, Bubblies? Good to see you, my man. Always here on time. Popcorn in the chat. All right, so if you could just let me know you hear me clear and everything coming through, looking good, we will just get started from there. So like always, we will start with the 10-year Treasury. Obviously very important for what we do here. Rates are essentially what's governing the markets at this point in time, because free money is essentially what's propping all this up, all these different asset classes. So looking at the 10-year, doing the exact same thing still. It's done nothing different. We're just oscillating inside that range. We are still 100% on track, and I do expect this to continue oscillating and eventually just creeping up towards that 2% target. That's our short range target. Obviously, the bottom of the range being that 1.46. When we came down, we touched the bottom of that fib level, as well as our ascending support channel. So here again, we're getting ready to run back into that once again. And, I suspect that when we do get close to bumping that thing, we're just going to bump it again and then have a nice little push up off of it. So every time along the way, we have bumped it and had a push up. We had our breakout to the upside, got our measured move, came back down inside of it. Ideally, if this was going to stay super bullish, it would have stayed on the top side and got that move. But, essentially at this point in time, the Federal Reserve is doing anything and everything in their power legally at this point in time to, basically make sure that these rates don't go too high. But I think it's going to be very evident very soon that the Fed does not determine the overall rates. They can just do their best to try to keep them under control. And, you may have noticed, depending on how much attention you pay attention to what they're saying and what they're doing, that they are now starting to come out with the, basically saying, look, we're thinking about raising rates. There's a possibility in the future, in the near future. We're watching inflation, et cetera, et cetera. So I think it's very likely that we might see that boost sooner than later here. So I think it's very likely we'll be in that 2% range before long. And the truth is, more than likely, I expect us to get closer to that 2.5 range. And that 2.5 range is danger. That is a real danger area. So, at that point in time, drastic measures may be in the book. So, but at this point in time, essentially what I'm looking at is this very key area that we oscillated inside of back here at the end of 2019. And, that's basically where we're at right now. So, but, if you're here regularly, like my man Bubblies, obviously you know that nothing has changed. And we've been on top of this since day one. We were talking about the 10-year Treasury rates before most of the other people talking about it even knew what they were or that they existed. So DXY, dollar index, is next. Obviously we were inside of this channel, descending channel, going down, fell through a bunch of different key resistances. And then, we were able to confirm that we had a potential breakout coming in. We got the breakout, got the retest. We then started operating inside of, what I was looking at as a 5-wave structure, but we have now broken down from that point. And, you know, obviously we had a key support here with this white line. We had a key support here with this yellow line. When we broke down from those two and we're unable to regain it, you know, it starts looking like we're getting ready to break down lower after we took out this low right here. But essentially the key low that we're paying attention to is that 89. If we lose that 89 level, it's going to look extremely bearish. But again, this is not the dollar in relation to assets. It's the dollar in relation to a basket of other currencies. So, and do want to pay attention also, obviously this is the daily chart, but you know, we have essentially that little low right here, and then we have a higher low right here. You know, this isn't confirmed. We could easily start going up from here or sell down lower. And then once again, you know, if we look at the Stochs right here, we can see we had a low right here and we have a much higher low, but again, still powerfully angled to the downside, back inside of the bullish control zone. So essentially what I'm paying attention to is, you know, this was our low back here basically that corresponds with these points and this point right here. And now here we are putting in, you know, potentially what could work out to be, you know, a higher low on both of these indicator oscillators, but a lower low on price action, which is, you know, obviously daily bullish divergence, which could result in a powerful boost back to the upside. So while we have lost a key support level, the most important support level has still been maintained as we are not putting in lower lows. We have a low right here, and then as of now, we have a higher low. That could change at any point in time if we come down here and take out that zero line at 89.2. But as of now, don't want to get overly bearish on this thing, but we have broken down from key levels, and this looks extremely weak. So, all right, great. So, like always, I'm going to work my way around the block, and we'll get to crypto here more towards the middle, as typically that's what the majority of the people want to see. We can also kind of see how this daily starts to play out if we just give it a few minutes to kind of develop. So, Dow Jones, we are obviously seeing quite a bit of weakness in these markets. Once again, expected. Dow Jones Industrial basically are just hanging on to this key support line here in blue, well above the breakout range. If we go to our longer time frame, just briefly here, this is our monthly chart. We very clearly have going back like essentially 100 years. You know, we have a key resistance here in purple. We have a key support here in blue. And for the last, you know, 100 years, we've been oscillating inside of this channel. So what I expect to do is for this to continue oscillating inside the channel until it doesn't. So as of now, we do have a confirmed break of the channel. Typically, I want to see on a longer time frame a breakout, come back, retest, consolidate, and then break and continuation from there. You know, also, if we look at just a little shorter of a time frame, you can see very clearly we have here in blue, support line at the bottom, resistance here at the top. You know, we have been respecting this broadening wedge or this like megaphone pattern for quite some time. And once again, we have broken out of the top of it. But we have started to show some weakness here on the weekly. You know, typically what I pay attention to is essentially once we start taking out like 50% of the candle in front of it, start looking at it as like potentially, you know, showing weakness. So obviously this was around the 50%. We then had another sell-off, you know, that got bought back up above our support level, and now here we are. We'll have to see how this week turns out. You know, if we lose this 33,835 level, I would expect us to come back down to these other key levels in red at like 32,750 or you know, 31,700. Also worth noting, we are inside of the bullish control zone, which is obviously good, but we now have on the TJD, TDMACD, multiple red histograms in a row. Typically 2 red histograms is a sell signal for me until we start flashing multiple greens in a row. And then also if we look at our jewel right here, we have a cross now of the blue below the purple inside the bullish control zone, but we have the hard sell followed by the hard buy, followed by the hard sell inside of the bullish control zone. Typically what I expect to happen after this is like the divergence signal, is we would leave the bullish control zone, get down here to like 80. We're still way up here. We're still at 90. So we have a way to go. But, you know, at this point in time, we are trending down on the knife. And we've got the divergence signal, which, you know, I'll point that out on a couple other charts if you're not familiar with that. But that is typically the most reliable signal. So on a weekly, you know, bearish divergence signal at the top of a range at all-time highs. Especially in a situation like this where the market is basically like, you know, just melting up, you know, definitely in my opinion, a risk off time for a lot of these markets. So also just switching back to the daily, you know, we are very clearly trending down on the TJD, TDMACD, a bunch of red histograms in a row. Slope line has flipped over red and we are still just going sideways. So is this going to be a bullish reset where we essentially just go sideways long enough and then these oscillators come back down to reasonable levels and then we have the ability to move back higher? Or is this going to just suddenly sell off? You know, I'm starting to gain a little more conviction that sooner than later we're probably going to have a heavy sell-off in this market. So S&P, here's our SPY, you know, very similar in many ways to the Dow Jones. You know, once again, operating inside of a long-term channel. I'm going to go back to the monthly here again. You know, this thing has been operating inside this channel since 2010, so we don't have quite the 100 years that the Dow Jones does. But, you know, even a 10-year trend like this, a very clear channel we've been operating inside of with only really like a couple little pokes out of the bottom of the channel. You know, that was obviously our capitulation event, and then just kind of hanging out at the top of the channel here. You could easily adjust this up slightly so that we never actually broke through the top of the channel, but I don't want to do that. I like how it looks right here. I like that it was essentially like fighting to break out and then never actually able to sustain it. Now here in a shorter time frame, we have very clearly broken out of the top of it, and then we came back down to retest it, but again, I want to see on a longer time frame us just kind of like hanging out here and you know, building support at this level and then possibly getting continuation. But once again, you know, we're at the top of the range, all-time highs with you know, crazy low rates in a ridiculous environment. So, you know, 2 red histograms in a row. When this thing opens back up this week, you know, typically to me, that's going to be continuation to the downside. We don't have anywhere to go from here. If we lose this blue slope line right here, you know, essentially that's going to just, it looks like it looks 100% like a throwover to me. It looks like exactly what we did last year in March. You know, we crept up like super high and then we basically got a breakout of the range, breakout to new highs, and then we capitulated down from then. Basically like walked the ball over to the cliff, threw it up as high as we could, and then when it ran out of steam, it just dumps back down hard. So, you know, potential target to the downside, you know, bottom of the range, $320. But again, I'm not going to get overly bearish on this thing just yet. But we do, once again, we're inside of the bullish control zone on the weekly. We have a hard sell signal. We have a hard buy signal. And then now, look, we're at the top of the range. You know, this thing made it up to 97. There's nowhere else to go from 97 but down. So now we are rolled back over. You know, we're flat on the purple and clearly downtrending on the blue. So what's going to happen? We get the hard sell signal here again when these two cross. So we'd have a sell, buy, sell again on the weekly. That is bearish. You know, that's our divergence signal at the top of the range at new all-time highs. You know, basically after a massive melt up, you know, 100% fueled by free money. We are also trending down very powerfully on the knife. You know, we're going to exit this zone if we get down here below 80, you know, at which point in time, that's, you know, final confirmation basically that this thing's about to fall off the edge of a cliff. So once again, I don't want to get overly bearish on this just yet, but looks terrible. We did come down multiple times and retested that support. We were able to bounce it, but, you know, we're bouncing it to lower highs. You know, we'll have to see what happens here, but we have already left our bearish control zone, you know, or bullish control zone. We got the hard sell signal, you know, left the bullish control zone, had a decent little pullback from there. I mean, like $10 on this thing, couple percent, nothing serious. But now we have lost the slope on the TJD TDMACD. It has flipped over to red and we are well below it. So we could very easily have a little bit of positive move up here on the daily, but I would expect the slope line to act as resistance. And, you know, once again, maybe we go sideways long enough and we maintain right here, build a nice base at this level, and then we get continuation to the upside. But I think more likely than not, we're going to see some weakness in these markets in the very near future, which doesn't have to mean like full-on capitulation. We don't have to just fall off the edge of a cliff and that's it. But, you know, we're definitely showing weakness at extremely high levels based on valuations. I don't actually, what's a valuation? I don't even think, we're not even using those anymore. There's no such thing as valuations. All these are essentially cryptos now. There's no such thing as earnings. There's no such thing as, you know, any of this stuff anymore. It's all just a fantasy land market. And, you know, that's fine. As long as we're, you know, making money in these markets, who cares? Fantasy land, that's fine. We'll just keep playing this game as long as the game is available to us. But it is very important that we're paying attention and taking profits along the way, because if there's one thing I know about what I'm seeing, it is unsustainable. IXIC, NASDAQ, We're looking at the tech sector now. This is by far, the most bearish of the charts so far. We have a bullish pattern that we essentially broke down from. We have still a higher low right here than the previous two little lows. So does it mean we have to fall off the edge of the cliff? No, but what does it look like happen? We found support here, found resistance here, found support here, fell through the support, came back up, resistance, sold back below it. So, in my opinion, more likely than not, what's going to happen, this is going to come back down here and retest the bottom of the range and look more like a sideways channel. We did get the hard buy signal. We do have multiple green histograms in a row. I don't like to see the slope flipping over blue like that until after the histogram is above the slope. But again, we'll have to see how it plays out. I don't want to get overly bearish on these markets, as it's very clear that the Fed and the government is willing to do absolutely anything in their power to make sure that these markets don't sell off, because it's a bunch of old people and they have a bunch of assets, and it's a bunch of rich people in politics, and the last thing they want to do is see all their assets crash. So therefore, it's in their best interest to, keep this fake market propped up as long as they can. We do have our first red histogram here. We are still very clearly inside of the bullish control zone on the monthly, but definitely showing some weakness now at the top of the range. Once again, bunch of red histograms in a row. We're now below the slope line. The slope line on the daily, weekly is getting ready to flip to the red. Essentially we're getting ready to lose the slope line, at which point in time I would expect one of two things to happen. We continue going sideways and don't sell off, and the indicator oscillators reset, and then we can move to the upside and potentially get our measure move break back up here with a target as high as 15,750 just right off the bat. But again, the 8 and the 21 are tightening right here. We're unable to break back above them. Tech looks weak, looks like trash. We did get the hard buy signal at the bottom of the range in the bearish control zone, but the last couple times we were in the bearish control zone, we got a nice little pushback up to the top of the range, nice little pushback up to the top of the range, broke through and continuation. This is basically a ascending triangle. Here we are, same pattern, ascending triangle. So, are we going to get the same? This is literally the exact same signature. A big, thick, green bearish control zone, a small bearish control zone, a hard buy. A big, thick bearish control zone, a smaller bearish control zone, a hard buy. This was basically our sell-off back here from, basically from December, not quite December, September 2020. And then we came down and tested the 89. Here we got basically the same situation, came down here, tested the 89, broke through it slightly, did not get down to the 200 moving average. So we'll have to pay attention and see how this plays out. But once again, the one thing I don't like about this setup, normally on the daily, looking at this, doesn't look bad. I would start to say like there's potential, bullish pattern, coming back to the top of the range, etc. But we have flipped over the slope blue, and I do not like to see the slope on the TJD, TDMACD flip over blue while we're underneath it. That is, once again, like essentially a divergence signal. So we'll have to see how that plays out. But if you've been watching this channel for any amount of time, you know that when I start talking about divergence signals, typically means we're going to see a powerful move after that. So Russell 2000, the ruddy RUT, giant head and shoulders pattern, looks terrible. Broke down from our support here the same way that the NASDAQ did. Came back up, got rejected. Came back up, got rejected again. This is a rejection candle. And honestly, this is fundamentally the weakest sector. I mean, technically, tech is the weakest. Fundamentally, the Russell is the weakest. I think something like 50% of the publicly traded companies inside of the Russell 2000 are not even profitable companies. Doesn't even make sense. But with the giant zombie economy and this giant zombie situation, it does not surprise me in one bit that those stats are in place. But again, valuations are absolute trash right now, and we are way overvalued on all this stuff. If you use like traditional metrics, important things like earnings and stuff like that, or sales ratios, but nobody pays attention to any of that anymore. And it's easy to just get rich in markets because all they ever do is go up, and I'm sure that's going to keep going on forever. There's definitely no chance we're ever going to get a pullback. Here we are crossing our Stochs. We have multiple green histograms in a row. So, this does look like it's building strength back to the upside. If we break back into the range and above this, we did come down here and essentially retest the bottom of the range. So we now have basically a flat bottom support, exactly like we expect, testing the neckline. We'll have to see what happens from here. we could very easily break down from here. But, you know, I could also be wrong, and this thing just keeps melting up to the sky, and, you know, everybody just gets rich or gets richer. XLE, energy sector, just a little ETF that I participate in. You know, the move played out already. We already got a nice little bullish trade to the upside, like 13.5%. At this point in time, we're just consolidating at the top of the range. A bunch of red histograms. We did get the hard sell signal, but overall, I don't expect this thing to get crushed or anything like that. But, you know, we are essentially at the point where coming back down to like that $48 range would not be unrealistic. It would essentially just be retesting that support, which we tested last time. But as of now, you know, once we broke above 48 and then we got up to like 54, we're basically just trading in a sideways channel. So we'll have to see what happens with this one. If we switch out to like a little longer of a time frame though, we get a little bigger picture of what's going on here. And, you know, essentially we just got rejected off the 200 exponential moving average. 200 simple is still up here at like 65. Not unrealistic to think that if we get this 821 cross right here, consolidate long enough top of the range, that we're going to burst and then our next target $65. That's what I'm paying attention to. We are powerfully angled to the upside on the monthly. We have all green histograms. We have crossed over our slope line right here, so it's just a matter of time before we flip that over blue, and we're about to get the monthly you know, cross right here. So this is basically the perfect setup I like to look for. Last time we got that set up right here, this was our cross of the 821. This is our, you know, green histograms, multiple in a row. This was our hard buy signal coming off the bottom of the range. What happened after that? You know, obviously you can look at the chart and see that we proceeded to get a 269% move to the upside. So, you know, you ready to triple your money? Because that's probably what's going to happen if we break through this area. So, you know, this is still well below its all-time high from back here in May of 2014. So it's been a long consolidation pattern after like essentially a long bear market on the monthly. So, you know, take some time to develop here. We could easily oscillate inside this range for a while, but I'm getting more and more bullish on this setup. Even just a retest, obviously 618 is just above the moving average, but even just a retest of the 786 is $73, 886 is 85, and then, you know, if we start looking at like Fibonacci extension targets to the upside, we're talking about like the 1.236 at 144, or more realistically, $254 is my target up here on XLE. I'm obviously very bullish on energy long term. But again, you know, we've had a nice little move off of the bottom already. In all reality, what I'm starting to look at this is basically just a 1, a 2, a 3. You know, this is our pullback to the 4 potentially, and that's why we're not getting like a deeper retrace. Alternative, you know, and then we would get a 5 to the upside. But alternatively, what I think is more likely, just based on like how this looks and everything, I think more likely than that, we're probably getting like a 1, a 2. This is just consolidation within the 3, and the 3 will actually continue to the upside further, and then we'll potentially get like a 4. And then, you know, if I just kind of move this around a little bit here, you know, more realistically, we would get something like, you know, a retest of like the 786 here, and then some kind of move like that. You know, again, this is just throwing it on. More realistically than not, I would expect us to come up higher, and we could put some targets in place and, you know, basically take a look at some Fibonacci extensions of each wave and what we could potentially expect. You know, basically the distance from the bottom of this pattern to the top of the 1 was a $24 move to the upside. So then if we look from the bottom of the 2 to the top of the 3 potentially, that would be like a $46 move to the upside. You know, but essentially at this point in time, we've already taken out the distance of the 1, so we could potentially be topping the 3 here without requiring that the 5 is going to be a shorter wave than the 3. So definitely some potential here that we, you know, already got our pullback, but typically I like to see a pullback. Often on the 1, we'll see a very deep retrace, and then on the 3, we'll see a much shallower retrace. But more realistically, you know, I don't like to see a really, really shallow retrace like that. I would want to see like something proportionate to the move. So on the 1, we came all the way up, and then we got basically like a heavy pullback down to the 78. Oh, it's already on there. Whoops. To the 786 there. So essentially from the bottom right there, if we were topping out right here, which again, I don't think we probably are, but you know, we got a 236 retrace, which is possible, but I would more realistically like to see at least a 382 retrace. So, you know, in my opinion, you know, just from where we're at right now, seeing this come up to like that $73 range and then come back down to like the 382, somewhere around like where we're at now basically, is more realistic. So, you know, two options right here. You can wait for the move to play out, come back down, buy the retest, or, you know, assuming this might have potential higher than that to the upside, you know, take the trade from where we're at right now. I don't typically like to buy into the moving averages when we're below them, like the 200 exponential right here. But the truth is, you know, when we knock our head on an exponential moving average like that, and then we come down and then we knock our head on it again, in my opinion, it's just a matter of time before we break through it. So maybe we come back down here again, put in one more higher low. But I think more realistically than not, we are headed to the upside sometime in the very near future. So, and then, you know, if we switch back over to the daily, once again, you know, and start thinking like, okay, what's a potential entry point for this if it's going to work out to the upside? And again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But essentially, I'd be looking at something like this. You know, maybe put a little thicker of a stop loss in place, 10 or 11. You know, theoretically, obviously, I'm not using a hard stop on this. I would be buying, you know, lower. But, you know, in all reality, start paying attention to some of these key levels for our potential move to the upside. You know, which, again, we don't have to get this move playing out exactly how we're looking at it. But in all reality, we're looking at like basically 45% move to the upside with 11% move to the downside. You know, that's basically a 4-to-1 risk reward ratio. So you guys know how I feel. 2-to-1 or better. You know, I'm very interested in. But we'll have to see how this plays out. But this is starting to look better and better. Longer we consolidate at the top of the range like this after putting in the high, more bullish I get on energy. And then obviously I'm extremely bullish on energy. As you know, basically you have to be, if you're going to be bullish on the human race as a whole, you need to be bullish on energy because more people need more energy. And, you know, we would expect essentially those things to, you know, act correlated. So Icln, this is the clean energy ETF. Once again, I'm very bullish on this long term, but it looks like shit right now. We are finding some support here at our lower low, you know, breaking down from a key level, obviously coming back up now and retesting that level now. What was support here multiple times in a row is now potentially acting as resistance. We also have a descending resistance in purple, a descending resistance here in red. You know, so we have a triple resistance basically right here. You know, at like that $23 range. So it's going to be tough to get through that. The last couple of times we got that buy signal, you know, it did not play out. It got rejected. But now here we are, multiple green histograms in a row, finding support off the blue slope line. You know, this thing is potentially looking like it's building that strength and getting ready to have that breakout to the upside. So, you know, in all reality, I would expect essentially the next time we come up here to come back up at least to like the 618. This chart is basically just like way behind every other chart we look at. Most charts have already had like that bullish bounce back up and then a rejection and then come back down. This one has shown like no strength at all. Just tells me probably a couple too many people piled into this. You know, everybody was talking about that green energy with the Biden administration and whatnot. So, you know, still obviously internal retrace, but you can see from basically that March low in 2020, all we've done is gone parabolic to the upside. So, you know, from that point, we had a nice little retrace. Nice little sell-off. You know, are we done? Can't say for sure, but we did hit back down basically to the 382, which in a bullish market, that's what I would expect to be at least, you know, for our uptrend. You know, I want to see at least like a minimum 382. And then if we stop at the 382 and bounce from there, that's bullish to me. If we come back down to like the 0.5 or 618, it's less bullish, but still it looks good. But, you know, if we start coming deeper than that, obviously it looks like trouble. So, and then just, you know, basically looking at like the 5-wave structure on this. If we got our 1, 2, here's our 3 to the top right here. We came back down to the 4 right there. And then, you know, we would essentially expect like our 5 to come up to essentially like the 1.618, assuming that we bottomed out right here, which would put us at like $50 on this thing. So from $22 right now, you know, it's a double up, 100% move to the upside. So you could easily put like a 10, 15, even 20%, you know, stop loss or mental level of, you know, invalidation basically in place. Typically though, I do like to see this play out for a little longer. So it wouldn't surprise me to see like an internal retrace, come back down, go sideways for a little while. Even if price doesn't actually go deeper here, you know, at least just coming down and touching that 382 perfectly would be nice, or at least going sideways for a little while in this range. You know, basically an internal retracement from our top here at 35, you know, to like the 382 essentially. But I do look at this as a buying opportunity and some serious potential to the upside. So, and again, obviously I'm very bullish on energy as a whole. So I'm sure you can tell by my technical analysis. So next, let's go ahead and do, let's take a look at tech next. Oh, appreciate you, Bubblies. Oh, and also, you know what? I want to take a quick second and I want to ask something from you guys. You know, obviously, you guys that are here right now, and then obviously anybody that's watching this video later on in the future, I want to see you guys give back a little bit. I don't want your money. I want your love. And what I mean by that is, you know, most of you guys, at least 50 to 75% of you are already subscribers to this channel. If you're hearing this, you're probably watching every one of my videos, at least partially, and you're already subscribed. You're probably dropping a like if you're not lazy. You're definitely showing some kind of support. But what I want you to do this week, I want you guys to take it to the next level. So many of you have multiple YouTube accounts. You have a spouse. You have a friend, something. I want you to reach out specifically to that other account, to that spouse, to that friend, and I want to see each and every one of you get someone else or one of your other accounts, or even if you make an account, never use it, and just subscribe. I want to see a subscriber bump this week. I want to see the love come back my way. I put a lot of time and effort into these videos. I enjoy doing them. I enjoy this channel. I enjoy the community. But it's time for me to call on you guys to give back a little bit. Also, I do have some positive news for everyone. I'm planning on reopening the group in the very near future. I have not decided on a specific date or anything. I'll probably just start it up like at the beginning of the month or whatever. But I will be reopening the private group, and you guys will get essentially anybody that's in the group will get early access to the technical analysis program, at least the initial level of it. Or I don't even know. I'll probably just do the first little analysis session for free, or course for free, and then I'll have like, you know, a discounted rate for anybody that's interested in like the advanced level courses as I put those out as well. But I am planning on reopening the trade group, you know, after some time. So get excited. But I do want to see a response from you guys. I want to see a bunch of new subscribers this week. Like I said, I really don't care. I just want to see the numbers bump up. I want to see a response from you guys so that I can know that you guys appreciate this and what I'm doing. So hell yeah, man. I appreciate that, Bubblies. I definitely appreciate that. And you know, you're one of many. And I do get, you know, regularly a little trickle of subscribers coming in, but I want to see like a legitimate burst this week. So I don't care what you do. You know, go out of your way, talk to somebody, you know, get them involved. Even if they don't watch the videos, even if they're not involved in this, I want to see a response from the community, and I want to see a burst in subscribers this week. So, and I will be paying attention, and I will appreciate it as well. So, so let's jump back into the technical analysis and keep on rolling. So here we've got our Tesla chart. You know, Tesla sold off exactly where I said it was going to sell off. Got the cross 821 to the downside here at $819. From that point in time, basically had like a 50% sell off. Not surprising, obviously. At which point in time, you know, we got our little bottom right here at a key Fibonacci level. You know what, I'm going to turn these moving averages off so we can get a little clearer of a picture right here. At a key level here, the 0.5 retracement of our, you know, basically like a wave here from that previous low right there to the high. We got that like internal short-term retracement, but we did not get the push back down yet to where I expect. So if we look at, I'm going to turn this one blue just so it's not like distracting. But, you know, essentially from our bottom here in March at $69, from that move to the top of the three, or what I'm calling the three for now, you know, that's our green Fibonacci level. And we have not even made it down to the 236. So, you know, just what I was just talking about, I expect us to come back down to the minimum of the 236, but more often than not, we will make it down to the 382. That is, you know, basically those levels are at $500, $493, and $342. I do actually expect it to push down potentially as low as the 618, which would be the measure move break of our pattern up here, and then also the previous top of the one, which would be $192. You know, if we don't get down to $200, I'm not going to cry, but I am going to be a buyer along the way at some point in time, depending on what the chart looks like. But, you know, what happened? We basically came down to my buying area short term. We came up to my selling area short term. We nailed the buying area literally exactly. We nailed the selling area literally exactly. We broke down from the key level exactly where I expected to. We came down to the 0.5 again and put in a double bottom. We have an extremely bearish pattern taking place right now, basically a descending triangle forming. What do I expect to happen from here? You know, maybe we fill out this triangle just a little bit more. You know what? Yeah, I'm going to just put a new one in here. Maybe we fill out this triangle just a little bit more. You know, something to like this level, and make that a little thicker. Make that a little thicky. But, you know, at this point in time, what am I looking at? This basically is just looking like a descending triangle playing out. So we are now operating on Tesla inside of a very clear descending triangle where we put in a high, a low, a lower high, the same low. And then what do I expect to potentially happen? A bounce as high as, you know, somewhere in this range. 683 would not be unrealistic. But at this point in time, what is that? It's like 10%. It's like $70, something like that. No, more than that. Where are we at right now? 580. So $100. I mean, get excited. Tesla might go up $100. But, I mean, are you going to... Is there a potential for a trade to the upside right here off of the support? For sure. You know, obviously. But in all reality, what are you looking at? A potential of like, you know, 10% to the upside right here, a little less than 10% to the upside versus like what's our potential to the downside right here? You know, what if we break down from, let's say we break down from where we're at right now, which I don't expect to happen. In all reality, you know, we're looking at like 43% to the downside to like 66% to the downside from where we're at already, which is like, you know, what, about 40% already. So, you know, that's a hell of a haircut for a potential like 10% to the upside. If we break through this range, start looking bullish, I'll be the first to tell you. We're getting the hard buy signal. We have multiple green histograms in a row. We have the blue slope line, but we're still below it. Again, not what I like to see typically, but, you know, very easily could see this back at like $700 very soon. So, but I'm not even close to getting bullish on Tesla. You know, and, you know, fundamentally, I think Elon Musk is being extremely reckless, popping off on Twitter, buying up crypto on his balance sheet, pumping Doge. You know, I mean, he's doing literally everything that you don't want to see happen from somebody of a public traded company that is like CEO of something you're invested in. He's acting extremely recklessly. He's acting like a fucking moron, honestly, in my opinion. So Uncle Elon is basically like, right now what I see is he's like building a little coffin for himself and Tesla, and like he's still working on it right now. But I mean, he's putting it together, and eventually if he keeps acting the way he's acting, he's going to finish building the coffin, and then he's going to open the lid up, he's going to crawl inside, and then the market's going to go ahead and start nailing that thing shut. And, you know, as much as I don't want to see that happen, as I've been an investor in Tesla and made quite a bit of money off of it in the past, you know, I'm bullish on the idea of it and everything, but it's not unrealistic for me to think that, you know, Tesla's going to get creamed on. You know, the only reason they've even had positive earnings is basically like government coupons, like, you know, basically like subsidies. So the government's saying, hey, if you do this clean energy stuff, we'll go ahead and give you subsidies. Therefore, Tesla was able to be listed publicly because you have to actually make a profit, which Tesla has never actually done, like without those subsidies. And then on top of that, the most money they've ever made, and the only reason they had a profitable quarter was because he basically like started trading Bitcoin. And if I'm not mistaken, his average entry on Bitcoin was like 32,000 roughly, somewhere around there. So in all reality, like he went from being like up 100% to basically flat to up maybe 10%. So at some point in time, is he going to sell his Bitcoin for a loss off the balance sheet? Maybe. He's already said that Tesla's not going to be taking Bitcoin now. You know, I'm just saying, you know, not making intelligent decisions, in my opinion. But, you know, you could say, oh, it's because he has Asperger's. You could say, oh, it's because, you know, he got famous when he was young. And so, like, you know, he thinks he's, like, unstoppable, invincible, whatever. I don't care what the reason is, but he's acting like a fucking moron, in my opinion. And who knows? Maybe it's the SEC comes after him again. He's already had issues with the SEC in the past. And, you know, is he going to go to jail? No, he's, like, one of the richest men alive. But, you know, if you got a bunch of money and a government that's wasting a bunch of money and trying to figure out how they're going to get more money to fund, like, socialism that's taking place in the United States right now, what's a good way to do it? Go after the low-hanging fruit. What's low-hanging fruit? Dumb rich people that are acting recklessly. So maybe they go after his ass, get a big old fine from him. Maybe they regulate him. I don't know what they're going to do. But, you know, low-hanging fruit, Elon Musk. That's all I have to say. Weekly on Tesla, let's take a look at what's going on here. We have a high, we have a low, we have a lower high. And look, we have a lower low. We have broke down from a key level, put in a lower low. So what typically happens with that? Continuation to the downside. We also have on the weekly, the 821 cross to the downside. So is it unrealistic to think we come back up to $700? We retest the 821 cross to the downside. It then gets rejected and we see continuation. Not only do I think it's possible, I'm betting on it. Okay, I'm putting my money where my mouth is. Tesla is going down. And, you know, if something changes, I'll let you guys know, in my opinion. It's not financial advice. I'm not your financial advisor, but hey, I'm sure right a lot. NEO, we'll look at a couple of these China stocks. You know, NEO broke down from a key level. What was support right here where we're at now is now resistance. We can't get back above it. Maybe we do, maybe we don't. I think more likely than not we get the breakdown to at least like the $23. You know, this thing still looks like shit. It has for a while now. You know, you know, obviously I don't have to keep going back and telling you guys how often I'm right, but I will because I like it. 821 has already crossed to the downside. This is exactly what I expect from Tesla. Okay, look, this is the 821 cross to the downside. We come back up. We retest the 821 cross, try to save it. We fail to save it. And then we get continuation back to the downside, put in a lower low. And then eventually this thing breaks down to our next key level, the 89 moving average, $26.34. You know, and at some point in time, if we continue to show weakness, what's going to happen? We're going to come down again. 26.23 is our 21 on the monthly. And then, you know, we break down from that. And remember, this thing was bankrupt at like $1 not too long ago. A year ago, this was basically bankrupt at $1, and communist China government came in and basically like bailed them out. So is it realistic to think that this was our 1, that's our 2, this is our 3, we're putting in a 4 right now, and this thing's going to get absolutely crushed? Yeah, looks good to me. looks more likely than not to me, which again, we're starting to see a ton of weakness in a ton of different places, or have been seeing, and now we're seeing continuing weakness in a ton of different places. So, you know, where do we come down on this thing? Do we come back down to $6? Probably not. Do we come down to $8? Yeah, and I'll still be bullish. Do we come down to $12? Yeah, and I'll still be bullish. Do we come down to $18? Yeah, and I'll be even more bullish. But I want to see this thing start showing some kind of strength at some point in time, at which point in time, you know, if we take our, you know, I show you guys the same thing over and over, so I probably don't have to do this all the time because you could probably just do it yourself. But let's look at our first retracement. From the 1 to the 2, okay, our Fibonacci extension target, oh, look, we got up to the 3.618 almost perfectly. We fell short by a couple dollars, okay? We were like $5 short. So 3.618, are we going to do that on wave 5, or are we just going to make it up to like the 2.618? I don't know. We'll have to wait and see. But assuming that we get a solid sell-off back down to like the 618. And again, we can look at what was our sell-off from the wave 1. The wave 1, oh look, it came down exactly to the 618 on wave 1. All right. So this one, if we come back down once again to the 618, that would not violate our 1. And then if we get a Fibonacci extension from there, you know, where are we going to come up to? 1.618 is $252. The 2.618 is $2,060, and the 3.618 is $17,367. You know, it's hard for people to fathom that things like that are a possibility, but let's just set it modestly. You know, let's just put a little baby target in place, and we'll look at our 1.618 at $253. So, you know, does it matter right now if you buy at $34 and it goes to $260, or, you know, if you buy basically down here at $8 and it goes to 260? Yeah, of course it does. You're going to get a way better, you know, profitability if it comes down low. But, you know, in the end, does it really matter? I mean, did you just 10x your money? Damn it, I can't even. So annoying when you keep freaking. Let me just put this in up. We put this in here, and then I can get a more realistic stop loss in place, because it's trying to give me like a ridiculous stop loss. Let's say, and again, I wouldn't put this as a hard stop, me personally, but, you know, essentially, if we're looking at basically a breakdown below the 618, I would be bearish on this. If we're looking at an entry at the 0.5 right here, which is, you know, you could potentially take one at the 382. So this isn't like the end all be all of entries, but, you know, if we just kind of get an idea what our potential is, if we get exactly what we're looking for. What are we looking at right here? We're looking at I forgot to look. We're looking at a 2,000% to the upside. 2,000% to the upside. Let me just say that one more time. 2,000% to the upside with a 37% stop loss. That's 53 to 1 risk reward ratio. So, I mean, maybe this happens over 2 years, 5 years, 10 years. Maybe it never happens. But, I sure do like my odds. If you told me we could flip a coin and I either lose all my money or I make 2,000%, well, I don't have to tell you how I feel. Alibaba, similar type situation here. Basically it's weak right now, but we broke down from a key level. We're coming down here. We hit my target. Could we see further sell off to the downside 100%? Do I want to see it come down lower than where we're at right now? And I keep showing these 5-wave structures. And like when I put the 1 in place and I project all these targets and I put my Fibonacci extensions and it's like, oh, it's not going to do that. It's not going to do it. And then it does it. So now maybe we'll look at it realistically as, is this potentially going to happen now for the 5 here? Well, maybe because, I was right last time. I'm probably going to be right this time too. So the 1, the 2 pullback, the 3, the 4 pullback would take us to the top of the 1. That's where we're at now. If we break down from here, it's going to look like a violation of this, okay? Because we're on log scale, the 1 looks really big and the 3 looks really small. I assure you, it's not. It's actually the opposite. If we go from the 1 down here, that was a $153 move. If we go from the 2 down here to the top of the 3, that was a $192 move. So it's just the log scale that makes this look distorted. But at this point in time, we've got our sell-off down to the 0.5. We're at a key support level. This is where I'm looking to take entries on this. I would rather see it start showing a little bit of bullishness because it's been bearish for so long. But it has sold off down to a key level. It did violate this green slope line. So is this bearish? Did we break down from support? Yes, technically. Are we at a key level where I would potentially want to take a long, for this crazy ass move right here? I mean, definitely, but I would rather see a little bit of strength coming in on the weekly, even on the daily. But, essentially we're just retesting the 200 exponential and simple. As long as we stay above that, keep the slope to the upside, looks extremely bullish to me in the long run. But right now, it still looks bearish. So we obviously got our weekly cross way back here at $268. Since then, we lost like 25% value on this. This is obviously more of like Alibaba's like a blue chip. This isn't going to just like sell off massively like a lot of this other stuff is. Also, I'm massively fundamentally and technically bullish on Alibaba. Like I'm fundamentally and technically bullish on China in general. Although I wouldn't put further downside like out of the question by any means. So I'm optimistically bullish. Realistically though, 8 and 21 look like they're getting ready to cross to the downside. But, this happened here, and then we got a parabolic move to the upside and saved it. So, maybe it happens this time and it crosses to the downside and it violates structure and we see a massive sell-off. Or maybe it does what it's been doing. So we'll have to see. But I wouldn't put like a big thick wick, out of question here, back down. But, on something like this, where's that wick going to take us? $180? Like it's $30 down from here, 15% sell off. I mean, again, am I willing to, am I willing to basically take a 15% stop loss? I have it set at 17%. So, again, that's not going to be a hard stop loss. I don't run 17% stop losses. I run tight stops because I just don't like drawdown. But if we get the 1.618, target to the upside here, that's putting us at a 91%, with that like 15% to the downside. And then if we get like one of our longer fibs targets, like the 2.618, we're talking about Alibaba at $620. So, again, this is more of like a blue chip, but, we're looking at essentially like a 11 to 1 or even a 5 to 1 risk reward. I like those odds. And, I'm a value investor. I like to buy stuff when it's cheap and sell it when it's expensive. I don't like buying breakouts. I don't like FOMOing into things. I don't like drawdown. Like it is what it is. I am obviously, I'm sure you know by now, I am conservative. The number one priority of my trading and investing strategy is to conserve my principal, conserve my wealth, and grow it over time. So I'm not the dude who's going to be like, I'm all in on Tesla on the breakout. I'm all in on Bitcoin at all-time highs. It's just not me. I'm the guy who buys Tesla at $100. I'm the guy who buys Ethereum at $85, Litecoin at $20, Bitcoin at $4,000. That's me. Okay, I'm that guy, and that's the trade setups that I'm showing right here. So if you want to FOMO into the tops of markets when they're in parabolic uptrends, there's plenty of channels that can help you do that. And when we get to the crypto chart, I'll show you what happened to all those people. So PayPal is next. And same, it's any of the tech sector has done the exact same thing. People were buying Tesla at $900 with targets of $2,000 and $10,000 because Cathie Wood said to. Well, I mean, how they doing now? PayPal. So yeah, getting away from China and back to some of the techs in the United States. We got our PayPal descending triangle. All these charts basically look the same. We're putting it, they're bearish patterns. And what happens with a bearish pattern? It typically breaks out more often than not back to the downside. PayPal 618 down here 137.5, 160. Even the 382, I'm okay with that. $187. Again, you're not going to get rich off this. You're probably not going to get broke off of it. But in my opinion, PayPal is not going anywhere. But who knows what's going to happen? Because what space is going to get upset? PayPal upsets the banking industry. Crypto potentially upsets, traditional finance. So PayPal diversifies into crypto. Therefore, basically hedging itself against what could potentially disrupt it. In the same way that you would expect a bank to hedge itself against what could potentially disrupt it. But do I think banks are going to go away? No. A lot of people are talking about how the Fed is going to take over the banks and close them all down and it's going to eliminate them. Okay, so I'm sure the Fed is going to get so big that they're going to be doing like home loans for people. They're going to be doing all these loans and dealing with like customers on the front line. No, the banking industry is basically the little tentacles of the Federal Reserve doing all the little dirty work, okay? In the same way that without even using a metaphor, basically, the Fed would have to grow by like 100 times and have 1,000 times as many employees and, have basically a massive website and all this stuff in place to potentially do what everybody is saying they're going to do. Is that going to happen? Yeah, maybe. Maybe the Federal Reserve takes everything over and there is a Fed coin and all banks go away and the Fed shuts them down and they take over everything. But when is that going to happen? It's going to happen in like 10 years. It's going to happen in 20 years. It's going to happen in 50 years. It's not going to happen anytime soon, in my opinion. So, everybody's saying, oh, Fed coins coming out. Yeah, probably not. Probably not anytime soon. Eventually, yeah, sure, maybe. But probably not anytime soon. It's like the dollar going away as the world reserve currency. Yes, it's headed in the wrong direction. And maybe it's gone in 5 years or 10 years or 20 years. But who's trading in 5 years or 10 years or 20 years from now? So much can change from then that even if you're looking at fundamentals, even if you're looking at technicals, so much going to change in that amount of time. There's no way to reasonably trade. So why are we even talking about it? We're not. And that's why we're going to move on. Apple. Apple, once again, blue chip, breaking down from key levels, putting in lower high. Are we going to come back down here to the bottom of the range, descending triangle? Maybe. I don't know. Maybe not. We'll have to see. There is a fat gap down here at the 786. Do we have to come down and fill that from, July of last year at $96? I don't know. Maybe not. But, you guys already know. I told you I expected us to get rejected from this range over here. We took that beautiful, beautiful trade, basically from the 382 back, 382 in white right here, back to the 618. That was a beautiful trade. It was very profitable. It was nice. And now I'm waiting for this to develop. We'll have to see what plays out. I do like Apple in the long term, but, is it realistic to think we lose 20, 25% of our value from where we're at right now? It's realistic to me. We are getting multiple green histograms on the daily. We do have the hard buy signal, but let's switch over to a longer time frame and take a look at what's happening on the weekly. Here we are. very clearly below the 21. Very clearly got rejected by the 8. The last time we were able to save this price action and avoid the cross, is it going to happen this time? Can we save it? Can we avoid the cross? Or do we end up down here at the 55 exponential moving average at $113 or the 89 moving average at, go figure, $100? Yeah, probably. I think so. We did get the hard buy on the weekly, but we have only red histograms. We are below the slope line on TJD, TDMACD, and we have a red slope line in place. Apple looks good in comparison to the other trash in this sector, but it still looks bad overall. So we'll have to see what happens. And again, if I'm going to be wrong, I'll be the first one to let you guys know. I'll come on here and say, I was wrong about Apple. The orchard is plump and juicy. Let's take a bite together. But right now, Zoom, you guys know, Zoom, descending channel. I like Zoom. I love Zoom. I think it has potential long term. I think that there was a fundamental shift in the marketplace with this whole CBD situation, and less people are going to be working from an office. More people are going to be Zooming instead of getting on a plane and flying somewhere to shake somebody's hand. I think everybody has gotten comfortable with technology. Everybody has bought all this equipment. Everybody has learned how to use it. Everybody has changed. The market has changed. Zoom is bullish in the long run. I'm still involved in this trade from down here at the bottom. We are essentially just, we basically broke through the heart line of the channel. We got the 821 cross to the upside. We're below the 200 exponential moving average. I expect us to come up to the top of the range, which is where the 200 simple moving average is. More than likely get rejected at the 200 simple moving average and also the top of the channel, at which point in time we will be in 38% profit on that trade. So I'll be happy with that. I'll very gladly take my profits, and I will wait and see on at least portion of my position, because realistically, there's potential for further move to the upside up to 86%, up to our like 200, what is that, $510 target. But in all reality, you got to wait and see, because more likely than not, what's happened at the top of the range? Here's the top of the range. Here's the top of the range. We haven't been able to break out of this. What's been happening at the bottom of the range? Here's the bottom of the range. Here's the bottom of the range, bottom of the range. Basically bottom of the range, bottom of the range. Haven't been able to break out of this. So more likely than not, what's going to happen? We're going to keep bouncing inside this range. So, I'm going to take profits on the majority of my position right here. I'm going to pull a running stop loss up here. And, if we break back down below, say, the 200 exponential moving average, I'll exit out the remainder of my position with slightly less of a profit. And that's okay, because at that point in time, I'm massively in profit and it's a free trade. And that's what I like. Just zooming out though. That's punny. I don't care who you are. Just zooming out to the weekly. 8 and 21 are crossed to the downside. Once again, this is a perfect example. We try to save the 821 cross. We do. And then we break down from it. We're still below the 8. We are below the 50 simple and 55 exponential, the two green moving averages. So more than likely, we come back down here at some point in time to that $250 range. So what does that mean? Well, we bounce up to the top of the range, we get rejected, we come back down to the bottom of the range, and we find support. And when does that happen? Roughly? Look, guys, if there's one thing I am, it's consistent, okay? I tell you when I think the top's in, and it's almost always the top. I tell you when I think the bottom's in, it's almost always the bottom. I show you my moving averages. I show you my Fibonacci's. I show you my indicator oscillators. And look, not right every time, but you wouldn't be here right now if I wasn't right the majority of the time. Pinterest, we bounced, we basically bounced to 236, which is good. That's what you want to see. But, what is that? That's the Fibonacci from the bottom, from the freaking bottom at $10 to the top at $90. So, we 9x from the bottom, and now we touch the 236. What does that mean? Once we touch the 236, we validated that we have potentially topped out this pattern, essentially put in a double top. I called the absolute top on Pinterest on that retest here because of this little candle right there and the retest of the top and double top situation. So do we get a move back to the upside that gets rejected and puts in just another lower high? Yeah, probably. We're getting the hard buy signal. We got a bunch of green histograms. We're above the 8 now, coming back up to 21, getting rejected at 200 exponential and simple, which have a flat slope on them. So does it have some temporary move to the upside? Yeah, maybe. But is it coming back down to, lower? Yeah, I think $38 is a safe assumption. Again, the 0.5 then is at 30, and then the 618 is down here at 23. Maybe I'm wrong too, and this was our 1, and that's our 2, and we're actually going to be like Fibonacciing from right here instead. It's possible for sure. but less likely in my opinion. I don't see the structure developed in the same way as some of our other charts, especially in the tech sector. So I think this is correct how it's drawn right now, and yeah, expect it to play out, obviously. Bumble, I mean, this thing has been getting stung. More like stumble, am I right? Descending triangle from its IPO. This thing has just been gotten absolutely dominated. I put this in place way back when. This is our conservative breakdown, of the triangle, of the descending triangle, of the bearish pattern that we were operating inside of. No surprise here, guys. Everybody knows, we get the breakdown. It worked perfectly. Come down to that level. We come down exactly below the 3.618, actually, just shy of the 4.236 of our, Fibonacci target, the extension from this range, from our initial breakdown. But, I mean, we'll have to see. We got to see how this plays out. You know what I mean? Is it's starting to show a little bit of life. We got, one green histogram on the daily. Are we in the bearish control zone? Could we potentially find some strength here and move back to the upside? For sure. Is $40 a value on this thing? I mean, it IPO'd at 70, so it's down like over 50% from the IPO, and the top was 80, down 50% from there. Could this thing be carving out a bottom right now? I mean, it looks like it. It really does. It looks like it's carving out a bottom right now. And while I'm not ready to just jump into this thing quite yet, I mean, even just like a retrace back to like the top of the range, we're looking at like 42% move back to the upside. So, what do you want to look at here essentially is like, do we break down below the 2.618? 11% to the downside, 42% to the upside. It's like 3.75, almost 4 to 1 risk reward. I'm not quite ready to take it yet, but I mean, I wouldn't. If somebody showed me this trade setup and said, I'm taking it, what do you think? I would say, not a bad idea. I don't love it, but it's a good setup. 4 to 1 coin flip on that. Not bad. Airbnb, maybe this thing bottomed out, honestly. I think it may have, but again, I'm not running after this thing just yet, but we did get the hard sell signal at the bottom of the range. We do now have very clear bearish, control zone, oscillating inside of it. We got multiple green histograms in a row. We're still below the 8 moving average right now, but we're very close to get like my second 2 green histograms in a row, and then basically a cross of the purple and blue Stoch right here, and then exiting the bearish control zone. That's 2/3 of my buying strategy right there. The next one being the 821 crossing to the upside. So, from a key level like the 886, typically I'd rather see it find support at 786 and then pump up, but is it possible to come down to the 886 and then we get a nice powerful move to the upside? Yeah, I think this thing honestly is carving out a bottom, very likely. Let's say we took a trade setup from exactly where we're at right now. What would I potentially be looking for? Well, if we break down obviously below that previous low, I don't want to be involved in this if we're putting in like a new low from, essentially like the IPO low back here. So let's say, roughly 11% to the downside for a potential upside target of, let's say we get back to a 0.5. What are we looking at? 21%. That's still 2 to 1 risk reward ratio. This thing's been getting absolutely hammered. Overall, I like the idea of Airbnb. Definitely not going anywhere in my opinion. So is a 2 to 1 risk reward from where we're at right now starting to look pretty juicy? Yeah, it looks pretty good. Again, I wouldn't call you stupid for taking this trade, but I'm not jumping in it just yet. I don't know though. Maybe I will this week. We'll have to see. But you guys will be the first to know. And obviously, if anybody who's tuning in late, it's not financial advice. Blah 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 blah. Dash. This is DoorDash, not trash bag crypto dash trash. Trashy trash. This one's sketch to me still. We got a low, we got a lower low, we got a lower low, we got a basically high in here. We got a lower high. What are we developing? I mean, some kind of like channel situation taking place through here. Something like this going on. Basically a descending channel. Yeah, it definitely looks like it to me. We got the hard buy. We made it back up to the heart line. We're about to get the 821 cross. We got the slope blue. Multiple green histograms. Would I have rather gotten it at $111 right here? than where we're at right now? 100%. Am I jumping into this one where we're at though after 40% off the bottom or 30% off the bottom? No, I'm not. I'm really not. Could we easily get back up to 180 though? Yeah, we for sure could. At which point in time I would be happy to see this low get or this high getting taken out. But in all reality, I need to see this high get taken out because this is just looking like basically a low, a high, a lower low, and then this would just look like this was part of the overall move. So in all reality, the move is let's look at which we do an ABC. Yeah, let's look at it more like this. It would be more like basically this, and then instead of this being the low right here, we would be looking at that as the low, and then this as the high, and then coming down to carve out like another lower low. So I would be looking at something more realistically like that. But we'll have to see. We'll have to see how this develops. But it is definitely showing some strength. So is there a possibility that, I don't see a trade setup from where we're at right now, but we could easily see another 30% to the upside from here. But, you can't really put a trade setup from here because we're in basically the center of the range. So if we get back up to the top of the range, we're looking at 30% move. But if we sell back off to the bottom of the range, that's a 20% move. So, that's not even a 2-to-1 risk reward ratio. And, Papa Crypto don't like that. Papa Crypto like at least the 2-to-1. I want to see the 2-to-1. I don't want none of the bullshit. There's a million other trades better than this, in my opinion. Peloton. I know people are getting super bullish on Peloton and it's coming back and blah, 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 blah. This thing is trash. TRASH. Look, there's a massive head and shoulders pattern. We broke down from the head and shoulders pattern, and all we did was come back up and retest the breakdown. So if we consolidate here long enough and start moving back to the upside, by all means, I will eat my words. I will apologize, and I'll take a video of me working out on a Peloton. Maybe I'll even like jam my arm up in there and see if it really gets ripped off or pulls me inside like it did to all those unfortunate pets and people. But the truth is on Peloton, this looks like a retest of a breakdown. And what happens after that? Support becomes resistance, and then we get our legitimate breakdown to one of these key levels. 0.5 at $55, 618 at $41, or maybe it goes to 0. I don't know. Or 26, not 0. But short term it looks okay. But let's look at our longer term chart and see, is this just a dead cat bounce? Well, let's see. On the weekly, we have an 821 cross to the downside. We came back up, tried to basically retest our 50-55 and our 8, and now here we are right at that range. We're inside the bearish control zone. We have one single green histogram on the weekly. Let's zoom out a little further to the monthly, which almost doesn't even exist on this thing. Yeah, that's a bullish looking candle right there. It is for sure. That's a bullish candle. It looks okay. Let's see what happens over the next 5 days. Maybe I will say, okay, if we get back above the 8, I'll say we're going to move back up to the top of the range. And I was wrong about Peloton. I'll jam my arm in it, and you guys can watch me in pain, whatever. But the truth is, look, there's not a trade here right now, in my opinion. There's not a trade here. The trade is to the downside. There is a trade, but it's to the downside. There's not a long on Peloton. There's a wrong on Peloton, and that's to the upside, in my opinion. SMH, Van Echter, ETF on semiconductors. This is one that I am involved in trading regularly right now. We basically had that bounce from before. We put in a lower, higher low, but we also have essentially like same high situation here. So how is this going to develop potentially? Is it going to develop into an ascending triangle? That's what it looks like to me. It looks like we're basically going to just continue putting in higher lows, move back up to the top of the range, and then eventually maybe we get that break of the range. We have a very clear resistance up here. And then we can start looking at measure move when the time comes, basically from the bottom of the range to the top of the range. Or, if you're like a Super Bowl, you could look at the lead in on this. I don't like to look at like flagpole lead ins like that. When is this breakout going to happen though? It could be a while. When's it going to happen? Like July? We could easily come back up to the top of the range and just fill this pattern out for a while. But if the break does come, when the break does come, potentially up here at like $300. But again, like, is that the trade you want? Do you want the trade from $238 to $300 on a massive pattern break like this? I mean, this is, it's a blue chip, basically. Like, this isn't, you're not going to get rich off something like this percentage-wise. It's not a lottery ticket. But, obviously very bullish on the space. But there's also some fundamental stuff that says we should be bearish on the space. Like, there's production issues, and this takes a long time to basically make, like, semiconductors. Like, you got to get the wafers. You got to have somebody, like, make this thing. You got to ship it all over the place because nobody does anything in one place anymore. The majority of them are coming from China or Taiwan. Like, I think a lot of the move in semiconductors has already taken place. And to tell you the truth, if this starts looking toppy, okay, back in 2020, semiconductors were selling off. And that's when I was calling out the capitulation before the big CVD dump, before anybody even knew about it, before anybody was even talking about it. This was our canary in the coal mine, okay? That was our canary in the coal mine. So in all reality, let's put a fib in place here and take a look at what we're potentially looking at. So that previous low to high, assuming this is just one wave of the structure, came down to the 618 and then got continuation, okay? Now let's look at our fib extension to see where we would potentially be topping this off. Topping this out, not topping it off. Topping it off is what Kathy Wood does for you. Topping it out is what the chart does. 2.618 up here is like 323. So, I would rather see this thing get a little more continuation to the upside and then top out somewhere at like the 2.618 Fibonacci extension, something like that. But is it possible that we top out in this area right here and then sell off? For sure, it definitely is. So I'm paying attention to that. But I think more realistically than not, I think we get up here to like that $320 range. We get that measure move pattern break. We get that 2.618 Fibonacci extension. And then we top out our wave 3, come back down for like a deep retrace. But we'll have to see. We'll have to see how it plays out. We will see how it plays out. But in all reality, from the bottom to the top, we came down to the 618. So if we do the same thing again from the bottom, let's say we top out right where we're at right now, and that's it. And, I was wrong. This thing sells off. The 618's down here at $140. That's 50% haircut. That's not even a haircut. That's a scalping. But if we come up to 2.618, we get up to like 320, and then we get our 6.618 retrace that just so happens to line up perfectly with the previous high right there. Do we get that low? Probably not on the wave 3. I would think more realistically we would bottom out at the 0.5, but it's 176 and 150. So, short term, there's probably a little trade to the upside here, but long term, I think that the risk to reward on this for like an actual long trending trade, there's probably a little too much risk and not enough reward in my opinion. But in all reality, this is just looking like a 5 waver to me. This looks like basically a 1, a 2. Our 3 comes up a little higher. Let's say the 4. Let's say it's a deep 4. Let's say we get up here with the 3 to the 2.618, and then we get our 5. Takes us up a little higher to the 3.618 of the previous wave. Or we could put our Fibonacci extension from the top to the bottom. Let me zoom back out here. From the top to the bottom right here. And I will make that one, let's make that one white. And then we will look at it. Fibonacci extension of the 1.618 is basically going to take us up exactly to 3.618 of that previous Fibonacci extension range for the pullback. So, that's going to put us up at like $523. So, it's still another like 100% to the upside. Nice setup overall. But, in all reality, how long is this going to take? But we'll see. We'll see how it looks. I'm very bullish on semiconductors, obviously, like for the future in general. But I mean, we need them for everything. We need an increasing amount of them for cars, for electric vehicles, for all this solar energy, for anything that has a computer in it, which now is everything. And soon people will have computers in them too. So every one of us is going to need some semiconductors in our brain stem or whatever in the future, I'm sure too. So, massively bullish on semiconductors as a whole, but is there potential that this is topping out? Yeah. Do I think we still have continuation to the upside though? Yes. ARK, ARKK, Kathy, record outflows, new lows, weakness, she got a little emotional in a interview I was watching the other day too. Stop selling the bottom on my funds and Bitcoin because you'll regret it, because I'm good and we have lots of analysts straight from college that are smart. That was the worst thing I've ever heard her say ever. We have a bunch of great analysts and they're young and they're hip and they're right out of college. Well, what do people that just get out of college know? What the people who taught them in college know? What do the people in college? They're old people because they're professors, especially if they're teaching master's degrees. Therefore, they're teaching you old curriculum, because I know for me, for instance, I was out of college for like 2 or 3 years and the majority of the curriculum I just learned was outdated already. And now, whatever, I don't even know how many years later it is, like 20 years later now or something like that. No, it's not that long. God, when did I get out? God, let's say 10 years, roughly 15 years later, whatever. Now, everything I learned in college is completely outdated and like moronic. So telling people that you're hiring people straight out of college and those are your key analysts, they have zero life experience. They learned a bunch of outdated material and they've not been participating in the markets in the way that you would hope they are. Kathy is like digging her hole deeper and deeper. Maybe Kathy is digging the grave and Elon's building the casket, and then they're going to crawl in it together, and then the market's going to like lower them down and play a tune while they both go like, 6 feet under or whatever. And maybe before then either, like we're going to stake their hearts and make sure they don't come back. I don't know. We'll see what happens. I think the idea of what Kathy's trying to do is smart, but I think it's way, way far out in the future. I think the majority of the money in Tesla short term and ARK, all her little different stuff is done. The easy money is done. Okay. And I think it's going to be more pain and less gain. We broke down from a key level. All of her funds look like trash. Also, one of my main arguments with Kathy is, if you're going to invest in all these different like ARK, like exchange traded funds, why are they all full of the same shit? Like, why not just make one fund? Why do you have a bunch of different funds that are all just full of the same stuff? It doesn't make sense. So I don't know. We'll have to see. But, does it look like just another descending channel that's just going to keep going lower? And, Kathy's just going to keep getting more and more emotional? Yeah, that's exactly what it looks like to me. And what do I not like to see? Emotional. I don't like to see emotional in investing in this space. We are below the 200 exponential. We are below the 200 simple. The slope is now flat to down. Look, I'm not going to help dig the grave, all right? I'm not going to pull out a shovel and do any manual labor, but if I was going to bet with my money by investing in ARK or not investing in ARK in the short term, I don't got to tell you where I'd be, because I am not in ARK funds right now. And, they look weak as hell. They look like straight trash. Look at everything Kathy Wood invested in. It's down like 50%. So, like I said, early on, I was bullish on Kathy. Later on, I was bearish on Kathy. And now I'm even more bearish on Kathy. It is what it is. But, hey, you don't come here for me to tell you how great things are and lie to your face and, rub your shoulders when you got a headache after you ran your head into a wall. Okay, I tell you how it is. I tell you you're an idiot for hitting your head into a wall. I don't tell you, oh, poor you, you're such a victim, it's unfair. No, I tell you the truth. And most of the time, I tell you the truth before it happens. GameStop, I don't know if any of you guys are involved in this. Some people had requested it, so we'll take a look at GME. We got a situation going on here. Look, fundamentally, I think GameStop is trash. Technically, the chart doesn't look bad. I don't know. Depending on what time frame you look at. Okay? But, this is not a bad chart. If you just showed me this and didn't tell me what it was, I'd say it's not a bad chart. But if we look at this monthly and you show me this candle right here, and then you say, well, we already pulled back. We pulled back. So we're good now, right? I wouldn't touch this with a 10-foot pole. We're about to get the monthly cross on the Stokes to the downside. Where is this going? Where's GameStop going? Okay, first off, let's talk about where it already went, okay? From the top right here at $66 to the bottom right here at $2.50, all right? Where did it go to? Oh my gosh, look at that. Fibonacci extension 1.618 to the wick. Oh my gosh, what a lucky move right there. Because I'm sure it's not a bot or an algorithm or market makers determining these moves. So if we made it to the 1.618, okay, let's look at this thing like fundamentally and technically and see where's the potential for this actually going to be. Like, are we going to get now? We got to pull back now to the 0.5 of, our breakout session. Actually, it was the pullback down to $2.62. So if we fib from the bottom to our top here at $500, can't believe GameStop was worth $500. That's crazy. It's not a bubble though. No way. No, GameStop is great because it's not like malls and video game stores are like outdated. It's not like people just download their video games from the internet and don't even buy physical video games anymore. It's not like GameStop doesn't rip you off if you go try to trade in your game that you bought for $60. They try to give you like $4 for it the day later. None of that's bearish at all. Essentially we came down to the 0.5 of that move, which was, I mean, look at that. Came down from $500 back to $35. Back up to, $300 something. So more than likely what's going to happen next, we come down to the 382 or we come down to the 618. So we either come down to a higher fib level, which would be $65, or we come down to a lower fib level, which would be $20. So, and the truth is maybe we do both because we got to come down to $65 in order to get to $20. So if you love GameStop right now at $176, well, you're going to be loving it even more at 75. And then if you love it at 75, I mean, you're going to be salivating at 20. But at $180 right now, I would literally rather punch myself in the eye than buy GameStop for $176. I would literally rather, I don't even know. It's shit. It's trash. Come on, guys. But I don't got to tell you because you already know. All right, I'm going to jump over in chat here for a minute, see how everything's going. Yeah, easy, bro. Will the course be for mainly swing trading like you do? Only asking because I'm looking into scalping as well at the moment. Okay, here's the thing, Bubblies. I am an investor / swing trader / scalper. So essentially, he says, best disclaimer yet. What's up, K-Holes93? Thank you, man. You guys get the point. But in case people tune in late, I just want to make sure some idiot doesn't just jump in and say, he said there's 2,000% to the upside. I'm all in. And then it goes down 10% and you get liquidated with leverage. So, but anyway, back to Bubblies. Yeah, basically, here's the thing, Bubblies. On this channel, because I only do like 2 or 3 videos a week, I don't really put scalp trades like in here because it's just too short a time frame and too much can change in between my videos. I don't want somebody entering. I mean, not that I expect you guys to listen to what I'm saying, obviously, but I don't want someone seeing what I'm doing and then saying I'm going to enter this trade because he entered this trade ever. But I know how people think and what people do, and I know that that happens. So me responsibly to not screw over the people that I care about, my community, I don't like talking about super short-term trades because anything could change technically in a chart, like in the time in between. And I don't want to feel obligated, like if something changes, that I need to quick make an update video for you guys, like some kind of crackhead, So I don't really talk about my short-term trades. Swing trades, I expect to last, like typically I'm looking at a daily chart for like pretty much everything or longer. So for a swing trade, I would expect that trade to last at least a week, a month, or, end up in a long, like legitimate investment position. So I don't mind, demonstrating them. But it will cover all of them. And my strategy actually, my trade strategy is like trend trading, works specifically for all those things, for scalping, for investing, and for like swing trading. But the truth is that when I scalp, I typically I use a little more aggressive of a strategy. I kind of do the opposite of what I do normally. I wait for like multiple confirmations for like my swing trades and my like investments. When I scalp, I like sell tops and buy bottoms typically off of Fibonacci extensions, key resistances, key supports, moving averages, etc. So I'm much more aggressive with my scalping and tend to use leverage when I'm scalping, which I do not typically do like with my swing trades or investments. So there's a big difference. But again, I feel an obligation to the community to not like dump all over your faces like all these other like quote unquote air quote analysts or technical traders or fundamental traders or whatever. All these like fake crypto, all these fake stock people, all these TikTokers. I'm not trying to wreck you guys. I don't want your money. I want the market's money. So for me, I feel an obligation when I'm not doing like regular updates or having live interactions. Now with the group, it's the opposite. With the group, I have like a Discord channel and I'm interacting with you guys, I don't even know, 16 hours out of the day on and off. So I'm constantly posting long and short trade setups. I'm constantly doing updates. I'm constantly like providing, fundamental and technical information, interacting with you guys literally like one-on-one or as a group, so it changes. I don't mind doing some scalp. It's not even that I don't mind. I 100% do scalp and, interact with those trade setups and whatnot as well. So, but I don't want people getting the impression that, my group is just some like signal service, because that's not the point of this. The point of all this is to help you learn so that one day you can point something out to me that you see, or you can do this completely independently the same way that I do without even having to interact with me whatsoever or even watch my videos or anything, to build confidence, to build a legitimate trading plan, to build a legitimate strategy, to learn risk reward, to learn position sizing, to learn, everything. Like, I want you guys to basically be like your own Jedis. I don't want to just like be the Jedi master and you guys are like my apprentice. It's not my goal. My goal is to make you completely self-sufficient so that you can do this for the rest of your lives and be profitable in these markets and recognize the blatant signals that we see over and over again with bullish and bearish divergence, with moving average crosses, so that you're not these dumb fucks who are calling out like $150, $200, $300,000 targets at the top of a parabolic bull run in Tesla or Bitcoin, when I'm sitting here saying, weekly triple bearish divergence. What's going to happen, guys? A massive sell-off. What's our target? Which, as a matter of fact, we can get into that right now. Best disclaimer yet. 3-1, baby. The menage a trois trading signal. Yeah, man. It's exactly right. The menage a trois trade signal. That's funny. Bubbly says, when you say short trend scalping, are you referring to a couple of days or like on a 15-minute chart? Everything, man. You know what I mean? Everything. I typically trade, like, realistically, the truth is I typically trade a 4-hour chart. I will go down to when I'm looking at something on a 4-hour chart and it's telling me what I want to hear. It's speaking my language. It's whispering those sweet nothings in my ear. It's rubbing me below the waist and I'm starting to feel good on the 4-hour. Then I go down to the 1-hour. Okay. And then on the 1-hour, what I'm doing is I'm looking for an entry point so I don't just enter on a 4-hour and then immediately suffer drawdown, because that's what happens a lot of time. You get confirmation on a 4-hour and then you get drawdown on the 4-hour, because the shorter time frames are already exhausted by the time you're getting confirmation. So I typically will go down to a 1-hour for my entry point, sometimes even a 15-minute if I'm just looking for like a quick scalp. Like when we get some crazy 20% sell-off or whatever, I will almost always immediately, like based on my knife signal, which if you're not using my indicator oscillators, go down to the comments or the description and go on TradingView and start looking at these things, because I give them all away for free. I have literally put thousands of hours into creating and tens of thousands of hours into fine-tuning these indicators and oscillators, building my trading strategy, all this stuff. So, the fact that I just give it away for free, and do all this stuff should tell you that, you know, I really don't need your guys' money, but, you know, you get what you pay for in a lot of cases. So, you know, the shorter term time frame stuff, you know, I might literally, if we get a 20% drawdown and I'm seeing key support or something like that, I might immediately enter a scalp trade on like a 15-minute chart. I might be in that trade for like, you know, an hour, and then I'm out with 10% profit, 5x leverage, 50% profit, whatever, and I'm gone. You know, fucking I'm gone. A lot of times too, the shorter term scalp trades will develop into, you know, basically me buying the absolute bottom or selling the absolute top. And then that'll turn into a swing trade, which may even in a bull trend, you know, or bull market turn into like, you know, a long fucking trending trade investment. You might be in that trade for the next 5 years, depending if it's like a commodity or crypto or whatever. So I'm going to grab a quick drink and use the restroom, and then we will get on with crypto. So give me a couple minutes, and probably like 2 minutes. You know, I'm never gone for long. So yeah, what's up, Arquette? Good to see you, brother. How long does it take to set up those 100 tabs? Not long, man. Not long. I mean, I honestly, I don't really reboot my computer that often. So, and I don't like having like, I like how I set everything up myself. I know there's easier ways to do it. I can do like the quad split and everything, but I like to be able to make stuff full screen like this. I like to be able to break it down and look at it. And the truth is, the 100 tabs you see, there's like another 100 tabs on my other monitor. And then like on my other computer, I have like another couple tabs as well. So at any given time, I might have open roughly 100,000 tabs. So, all right, I'll be back in just a minute. All right, welcome back. Appreciate everybody in here. Hey, if you're in here right now, make sure you smash up that like. And I made a little disclaimer earlier, or a little request earlier, that everybody either you know, ask a good friend, a spouse, a child, anybody else that has a YouTube comment. I want to see a spike in my subscribers this week from you guys. So I don't care what you do, but every one of you got a homework assignment. Get one of your friends, family members, or other YouTube accounts, subscribe to me this week. I want to see a big, thick, jump in my subscribers. So that's all I'm asking for, guys. And, you know, I will directly link the relationship between, I also talked about bringing back the group. I'm planning on reopening the private group. So anybody interested in that can either leave me a message, a comment, or whatever. But I'm planning on reopening that in the very near future. And I will take specifically, you know, the response that I get from you guys as a direct indication as to whether or not you're interested in the group. I already know that there's a bunch of interest in the group, but I'm basically saying, like, look, I want you guys to give back, and how I want you to do it is by each of you doing a homework assignment and getting at least one more person to subscribe. All right, so let's get rolling. Little reminder to anybody that just tuned in, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. Let's look at the corn. All right, so look, we talked about the bearish divergence. I called the absolute top of the cycle. Since then, we have sold off 50%. All right. I called the bottom of crypto. I called the top of crypto. Called the breakout on gold. Called the breakout on silver. Called the top on tech. Called the top on the entire markets over a year ago before the capitulation dump. I mean, there's a reason you guys are part of this community. Now here we are after that aggressive sell-off from 64,000 down to 30,000, okay? And where is that? That's at our target right here. Our big, thick target, okay? We hit it perfectly, all right? We wicked up out of it multiple times. So am I super bullish right now because we hit my target? No, okay? Because we bounced the target, made it back to the rejection zone, which is the 0.5 to the 618, okay? Got rejected, come back down, and all we've done since then on the daily is just put in lower highs. I mean, lower lows. I mean, both. So, look, it just looks like we're going to get continuation. Maybe go sideways here. Maybe we see another reaction rally back to the upside, but I'm not getting super aggressive on this. You know, the 15-minute was showing a little bit of bullishness. The hour was showing a little bit of bullishness, but the 4-hour, we're still not even above our 8 moving average. We are starting to demonstrate a little bit of bullish divergence at the bottom of the range, which is potentially good, but we got to wait and see how that develops. So I am not super bullish on this. I scalped the dump initially. You know, nice little, like, I mean, I didn't buy it at the absolute bottom. It was like 32.50 or something like that, and took profits up here at like 40,000. But in all reality, I mean, this is just a dead cat bounce, and now we're rolling over in continuation. People are trying to say this is the A, that's the B, that's the C, and we're done. Maybe that's right, but, you know, we talked about this way before it ever happened. Before the bearish divergence played out, before the capitulation dump, before everybody lost 50% of their account value. You know, I've told people for weeks, literally, that we were topping out here. When we topped out right here, I specifically said I expect us to come back up higher because we didn't hit my $64,000 target yet. We then hit my $64,000 target and have not gone up since then. So at that point in time, you know, 382 retest, back on top of the 236. We came down between the 786 and the 886. Okay, that's good. That's all good. That's what we want to see. We came down perfectly. You know, I talked about this blue line right here. I talked about the breakdown from the blue line, how expected a retest. Talked about the underperforming, and then how we got rejected basically off the yellow line here, and then how we were coming back down to this $30,000 range. All right, I explained why we were coming down to that $30,000 range. This was no surprise. If you watch my channel, this was no surprise, because the entire time, what was I saying? This is Wyckoff distribution. Now, everywhere on the internet, everywhere you go, there's this Wyckoff distribution pattern chart. The hindsight TA is busting all over the place. Everybody and their mom all of a sudden knows what a Wyckoff distribution pattern is. That's great. Round of applause for everybody who called the top after it happened. Great job, guys. I mean, it's so ridiculous, the fake TA and hindsight TA we see in the space. We got the initial breakdown to the 236. I expect at some point in time, we carve out a bottom here on this parabolic trend line that has been going on since our capitulation dump back in March. You know, I expect this to touch that, essentially bottom out somewhere around this 236, like essentially like that $30,000 range, and then essentially get a bounce back up to basically that same top right here, which is going to act as a heavy resistance, maybe even as high as that 0.5 at like 44,000. But at that point in time, if we get rejected and come back down, it's just going to look like a gigantic head and shoulders pattern. You know, I talked about how you can tell the difference between different types of topping and bottoming patterns, and how all these people are saying, this isn't what a top looks like. Tops are blow off and bottoms are V's. Well, there's different types of tops and different types of bottoms. And the types of tops and bottoms are rounding and V's. Okay. So you can have a, you know, blow off top, which is like a V top. You can have a rounding top, which is like what we did right here. Same with bottoms. So this would essentially look to me like a gigantic head and shoulders pattern. So, you know, even if we get a bullish retest back to the upside, this whole situation is still going to look like shit to me. Does that mean that this bull market's over and that's it and we're going back down? I mean, maybe at least temporarily. Maybe we still make it to 70 or 150 or 300,000 on this like halving cycle. But I mean, let's be real here. If we go sideways for a few more months, we're not going to have too much time for this halving cycle to play out to the upside, because I expect this cycle to top out by the end of the year, this year. So is this early for me? Yes, for sure. But is it possible we move back up to a new high still this year? Yes, for sure. But we got to really just wait and see what happens with that. At this point in time, though, you know, if we look at what the measure move is going to be from the head down to the neckline, and we assume that this is going to break down, we assume that I'm right again about this head and shoulders pattern potentially playing out. I mean, it's going to take us down. Again, you can't really do these measure moves on log scale because they just don't work out. But essentially what I would expect to happen is basically a breakdown to this, our long-term trend line. The only problem that I have with the way this situation looks right now is in no bull market, bull cycle, halving cycle, 4-year structure ever since the inception of Bitcoin have we ever come back down and retested the previous cycle high. The only exception is when we had this like double bubble. All right, the double bubble. We came up here, we topped out prematurely. We came up to a new high, all within a single 4-year halving cycle. Then we came back down, and when we double bubbled, we came back down and retested the initial high, and that was our bottom at like 165 bucks. That was before I was involved in Bitcoin. I had heard about Bitcoin then, and I was extremely skeptical because I said, government doesn't let you do that unless your name is Chuck E. Cheese. They don't let you just make up your own money. Well, I was wrong back then. That's fine. You know, I'm not as rich because of it. I wish I listened to my cousin way back then. 100%, you know, whatever, that's fine. But the fact of the matter is that was one time when this happened, and it was a double bubble scenario like this. The previous bull run before that and the bull run since that, you know, we came up, and then when we sold back off, we didn't come even close to the previous top, and we definitely didn't retrace down below it. So if this time we come back down here and this is a single bubble situation and we come back down to that $20,000 range, that looks extremely bearish to me. If we don't hold at $20,000, or even if we touch at $20,000, it's doing something we've never done before. Granted, we only have like 2 or 3 like total points that we can look at, but this is, you know, I was talking about this double bubble scenario way back when, before this massive bull run even happened, about how this could potentially happen. So is it realistic to think we're going to get that same type of move like that? I mean, I think so. I think there's definitely a possibility that that happens. And what would that look like? You know, it would basically look like a breakdown from this point, taking us back down to our heart line right here, which is coming in around that $20,000 range, closing that $18,000 CME gap back here and the $24,000 CME gap. And then after that, maybe we go back up, we go to 75,000, we go to 100,000, we go to a gazillion, trillion, billions, whatever. Some made up number that I don't even understand yet, because we're so bullish on crypto. But the truth is, I mean, let's be real here. I don't have to tell you now the market looks like shit. I told you it looked like shit at the top and what I expected. So, you know, obviously it looks like shit now. That's that hindsight, TA. So now that everybody's bearish, I expect us to come back down here, put in a new lower wick, scare everybody out of this situation, and then get our move back up potentially to like 40,000, 43,000, somewhere around there. So, you know, but as far as I'm concerned right now, I think that those are our two situations. We either find support right here, carve it out, and continue to the upside, or we break down to like 18 to 20,000, find support on, you know, this essentially is the Bitcoin like heart line for me. Okay, you can see very clearly we found support on it multiple times here. You know, we broke down slightly below it, but never deviated from it too far. But this is our mean, basically. Like, this is our reversion. The further we get away from it, the harder we come back down to it. Further we get away from it, harder we come back down to it. Away from it, to it, slightly below it, you know, and then here we are again. We got parabolically far away from it. We broke down from our initial blue parabolic trend line. We came down and retested our yellow parabolic trend line. Our next trend line target to the downside is our white parabolic trend line. And that's going to put us in basically between like, you know, anywhere around like 15 to 20,000, depending if we overshoot or whatever. If we come down lower than that, we got this green one that comes back from the low right there to the low right there. I don't think we come back down to that, but is it possible we get back down to like $7,000, $8,000, $9,000? Yeah, it's possible. It's possible Bitcoin goes to $100, at which point in time I think that's probably the lowest it'll ever go to, because there's always going to be a crypto Bitcoin cult, whatever. But, you know, let's be real here, guys. I mean, this is sobering for a lot of people. This is a strengthening downtrend based on the waddah explosion. We got a blue slope line strengthening to the downside. You know, we've got essentially Fisher Transform said we're getting crushed here. We're clearly getting crushed. We have entered the bearish control zone for the first time since 10,000. Before that was our capitulation down to 4,000. But the truth is, what we have to really pay attention to is this a change of trend? Because this bull trend could easily continue back to the upside, at which point in time, this should obviously be the best place to buy at, is the bearish control zone down here. But do we want to just jump right in out of nowhere? Or do we want to wait for a situation like this? Okay, and when I say a situation like this, I mean, this is the peak to the bottom right here. That's right there. This is the peak to the bottom right here. That's right there. That is massive bullish divergence. Okay, so we want some bullish divergence. Bullish divergence right here. Bullish divergence right here. I want to see bullish divergence from a key support level. Okay, are we getting bullish divergence right now? No, not at all. There's no divergence taking place right now. This market is completely in line. The indicators and oscillators and price action are completely in line. And this looks like shit. And we still have not seen a true capitulation from all these trash bag shitcoin altcoins. They're still, like, most of them have sold off the same amount as Bitcoin. We've seen a little bounce in Bitcoin dominance, but it's absolutely pathetic. That's not what bottoms look like. So there's no reason for me to think that this is the bottom of the sell-off and that's done. Maybe temporarily, at which point in time, this would look like an A. You know, everybody is always like, that's an ABC correction and it's done. It's over. We did it. No, it's not. It looks more like if we did this right here. A would be down to here, okay? A B would be here, and then a C would be, you know, potentially something like that. That looks more realistic to me. That's something like that. Or maybe it doesn't. Maybe it comes here and we put in a higher low on the C. That's a possibility. Maybe it comes down here, okay? But the truth is, maybe it comes to the 382. The truth is, once we touch that 236 right there, we have basically said to the markets from our bottom at $4,000 here, we have topped out very likely, at least temporarily. So to find support at the 236 and continue to the upside does not happen very often. We almost always get a dead cat bounce at the 236, come back up to a lower high, a key Fibonacci level based on, you know, basically our previous support level here, or, you know, wherever this decides it wants to end, and then we come back up to like the 0.5 or something like that, retracement of our downtrend, you know, which was essentially just be fibbing from the top to, you know, wherever we decide to bottom out right here, 236, the 1, whatever it is. We get our bounce back up to the 618, you know, maybe it comes up to here, maybe it's right here, depends if it underperforms, overperforms, but at least the 0.5, at least like that 40 something thousand range, 43, 44,000. I would imagine if I was a market maker, I would probably pump it up higher than our initial dead cat bounce, which was the 0.5 right here, up to the 618, get everybody extremely bullish because we took out this high right here, and then I would throw it over. So, you know, as a market maker, that's what I would do personally, because what am I trying to do? I'm trying to fuck the most people possible, you know, and that's how you do it. You take out the previous high, and then you throw over, and then it dumps. So, you know, that's what I would see a potential for this looking like. Now, again, a bunch can happen between then. A lot can develop between then. You know, this is now looking at July of 2021. So we're looking at like a July bottom right here. You know, and again, that's time analysis, which is the least reliable type of analysis, you know, but I think realistically, I think that's a realistic target to the downside right here. Now, again, anything can change. We don't have to get down to 16,000, but you know, is that the type of shakeout you really need? This isn't a shakeout. Okay, this shake out a couple people, but all we did was take out people that invested this year. That's January of 2021 right here. This is January. So we took out a few months worth of price action, and it just so happens it was $30,000 in price action. A shakeout is not a few months of price action. A shakeout is, oh shit, it's over, capitulation, dump, and then continuation back to the upside. That's a shakeout. So that's what I'm looking for. That's what I'm expecting. And in my opinion, that's what's realistic. I mean, but you know, again, I'm not trying to hurt anybody's feelings, you know, but I tell it how it is. You don't come here to get that shoulder rub. You don't come here for me to tell you how pretty you are. Let's look at our moving averages. You know, obviously the 821 cross back here, very clear indicator. But if we go to our Bitcoin futures chart, this was the number one reason I told you I was seeing divergence between the Bitcoin futures chart and the traditional market chart. And that was back here at $57,000, which is where I closed out my final, like, you know, basically like long position on Bitcoin because it looked like shit. We got the 821 cross to the downside for the first time since $10,000. Okay. We had a divergence because we had got that same cross multiple times on our daily for the traditional markets. We had crossed down to the downside multiple times. So when we got rejected from this area at a key level after breaking down from our parabolic support, it was very clear we were going lower. Okay. And everybody was trying to buy the dip, buy the dip, buy the dip. You don't buy the dip in a bear market. You sell the rip in a bear market. You buy the dip in a bull market. So when you start doing things you haven't done the entire cycle, like an 821 cross to the downside, that's when you start compromising your bull market and you stop buying the dip and you start selling the rip. So normally you want to buy the dip. All through this, you're buying the dip, buying the dip, buying the dip. Here, you're selling the rip, which is here. And then the next rip we get, we're going to be selling that too, okay? And, you know, in this case, it'll be shorting it. All right, so no green histograms yet. A bunch of red histograms in a row. We're in the bearish control zone. We're exiting the bearish control zone, trying to get the 821 cross back to the upside, or the Stoch cross back to the upside. You know, there's not enough confluence here. We're still well below our moving averages. We've broken down from a 200 exponential, broken down from a 200 simple on the daily. We now have flat to negative slope on these moving averages. What happens when you're below the moving averages, the 200 exponential and simple, and you have a negative slope? You're in a bear market. You're de-risked from that asset. I have no interest in a long position, like an investment, quote unquote, in an asset, no matter what it is, when we're below the 200 exponential and simple moving average and the slope is to the downside. Not interested. Very, very rarely am I interested. So, I mean, it looks bad. Let's go to our weekly chart. I mean, look at this weekly chart. The 821 are about to cross. So where will we have to come back up to retest that cross to try to prevent it? 44,000. Where's my target potentially to the upside? Between 42 and 45,000. You know, that's our throw over basically. We come back up. We fail to cross it back to the upside. We get rejected. We sell back down to our next moving average, which is 25,000, or potentially down to our 200 exponential or simple moving average, which is like 15,000. So look at the levels of confluence. Oh yeah, and let's look at this one. What is this signature right here? Hard sell in the bullish control zone. Hard buy in the bullish control zone. Hard sell in the bullish control zone. Exit bullish control zone. That is the divergence signal playing out to a T on the weekly. I mean, if this doesn't get you excited when you see this right here, if it doesn't get you excited now to know what the hell I'm talking about when I say this is the most reliable signal and my favorite thing to see at the top of markets or the bottom of markets, I don't know what gets you excited, honestly. Well, I probably do know what gets you excited, but not in these markets. I'm talking about that dirty. Here is a bunch of red histograms, hard sell signal, X in the bullish control zone on the weekly. Guys, we're about to get the 821 cross. You know, looks bad. Crypto looks bad. Look at that big, thick monthly candle that's deep inside this market. I mean, this market is bent over with a big, thick, red candle. I mean, that's bullish. That's bullish. Buy the dip. Did we ever see a candle like that from here? Nope. Did we ever see a candle like that this whole way up on the monthly? Did we ever see a big, thick candle like that? Oh, yeah, we did right here at the top. We saw one at the top right there. We saw one on the drop right there. You know, saw one on the capitulation drop right there. We saw one on the capitulation drop right there. And then we've got this big boy, this big thickie. Okay? We are about to exit. This is the monthly chart. We're about to exit the bullish control zone right there. Where did we do that last at? Oh, right here. What was that? Oh, look, it was our top. That's so crazy. Oh my God, that's so crazy. And then look, we got the red histogram, the big thickie, okay, right there. Where's the last time we got one of those? Right here, multiple in a row. We got a couple little guys right here. When's the last time we had a monthly red histogram? Oh, look, it was right after our last top. So we have a top, a red histogram, a hard sell signal. We have a top, we have a red histogram. We have a top, we have a red histogram. We got, oh, about to exit the bullish control zone and get a hard sell signal? Just saying. Just saying. Zoom out. Look at the daily, then look at the weekly, then look at the monthly, and tell me you're bullish on this asset. And if anybody is telling you they're bullish, buy the dip, and this, that, and the other, ask why. I mean, I explain literally my reasoning behind all these things in advance. I tell you what I'm potentially expecting to happen before, after, I reiterate it, and then I come back afterwards and tell you why I was right, why I was wrong, and what I'm going to do to make sure that I'm right and not wrong again in the future. Okay? That is called technical analysis. It's not hindsight TA. It's not none of that bullshit you're seeing all over the place with these big influencers, you know, who got all these subscribers and all these videos and everything. Because I'm going to tell you the truth right now. If I wanted to grow my channel the easy way, I would just get on here every day and I would rub your guys' shoulders and tell you how whatever crypto you love is going to the moon. I would tell you about new shit coins like Rocket and Shiba Inu and all this stuff, and I would tell you that there's targets at $100, $1,000, $1 billion, $1 trillion. I'd tell you Bitcoin's going to $1.2 million by the end of 2022. I would tell you all this bullshit because that's all people want to hear. They want to hear about how they're going to escape their shitty life and how they're going to become rich. Okay? You're not going to, you know how you get, you know what happens fast? You lose your money fast. You know what happens slow? You make money. You make gains on investments slow and responsibly and reasonably, okay? Because if you make money fast and you lose money fast, you're probably gambling or being irresponsible. And that's not what this channel is about. There's a million other channels where you can go hear what you want to hear and, you know, people are going to like tell you how great this, that, and the other is. I'm going to tell you how it is. So that's the most important thing in my opinion is this is a real channel. You know, I'm not going to, it's not always going to make people happy, man. Trust me. I would have loved to see Bitcoin go to $250,000 and lock in more gains. I would love to see Bitcoin go to $1.2 million. I would love to see Doggy Dogecoin at $10. I would love to see Ethereum at $10,000 or $20,000. Okay, but while everybody else is talking about Ethereum's going to $20,000 when we hit $4,000, I told you we were going to $4,000 and then we were going down to $2,000. And what happened? Okay. Did we make it? I literally said I would bet anything that we go to $2,000 before we go to $10,000. And what happened immediately afterwards? Oh, look, parabolic SAR, capitulation, 821 cross to the downside. And where we go to? $1,700. The perfect retest of the exact spot. I told you we were going to retest 200 exponential moving average. This thing is just rolling over. It's pouring out. We got red slope line. We got the hard sell signal at the top of the range. I mean, look, I'm going to keep reiterating this stuff over and over again. I know it doesn't make people happy, but the truth is, like, you know, if you at least learn, at least you, it's like college. That's how I look at it, okay? You go to college, you pay a bunch of money, and you learn stuff. That's okay, all right? Trading, it's okay to lose as long as you learn from it. If you don't learn from it, then you lost, and you're going to keep losing again, and that sucks, okay? Now, what are we seeing right here? What is this on the weekly? We've got a hard sell signal. We've got a hard buy signal. We've got a hard sell signal. We broke down from the 8. We are now just barely hanging on to the 21. Could we bounce back up to the upside? Could we get back up to 3,000? For sure. But what does this tell you? We have just left the bullish control zone. We have 2 red histograms in a row. We are barely hanging on to the 21 moving average after this pathetic dead cat bounce off of it. What is this? This is the fucking, I mean, this is it, guys. This is the divergence signal. Where's Ethereum going next? It's going low. It's It's going to 1300, 1377 rather. The 50, 55 exponential, the 89 down here at 900. Is it going to the 200 exponential or simple? Is Ethereum going back to $600? I mean, if this is the end of the bull market, I mean, I bet it is. I bet it is. Monthly, about to leave the bullish control zone. We are losing the bullish control zone. Do we get a bounce right here? Yeah, maybe we get a bounce all the way back up to this level. And then what is it? It's a head and shoulders on the knife. All right, we're about to leave the bullish control zone. We did that once before. You know, here it was way premature, obviously, but then we left the bullish control zone. Here we left the bearish control zone, got the hard buy signal, got a massive run up since then. Here, you know, we're at the top of the range, potentially getting ready to flip this over. Ethereum looks like shit. I mean, look at this candle right here. If we take out the bottom of this candle on a close of 1900 on this monthly, we got, you know, basically 8 days. If we sell off below 1900, that's a bearish engulfing candle after a massive rejection. I mean, what is this? What's this in the chat? What is this right here? What's that candle potentially right there? That's that shooting star rejection. And where does the shooting star go? It goes up, it gets rejected, and then it shoots us straight back down to Earth. Okay? And you don't want to get hit by that meteor or that asteroid or that little piece of space dust. Matter of fact, I think people are smoking that space dust. I think that's what's going on in the crypto space. These bulltards. How else do we know that Ethereum was about to get wrecked? It was about to get rectally destroyed. Ethereum to Bitcoin ratio. Let's look at our daily Ethereum Bitcoin ratio. We got the sell. We got the buy. We got the sell. We got the divergence signal at the top of the range. Okay? But what is this right here? A clusterfuck of stuff, okay? But what is the thing that's missing from this? They told us we don't want to get out of this position yet, okay? What is telling us? We didn't leave the bullish control zone. Here we left the bullish control zone, and what happened after that? We capitulated. Bunch of red histograms in a row. Where do we exit based on my strategy? 2 red histograms in a row. Hard sell signal, 2 red histograms. Where did we get out of Ethereum at? The 0.07. Bitcoin, Ethereum to Bitcoin ratio. All right. All this stuff corresponds. We've got right here, parabolic SAR, red, rolled over. When did that last happen? The top of the range back here. A little bit right here. We had one little parabolic SAR right here. So as soon as this flips over, you say, wait a minute, that's something we're not used to seeing. This is a change in structure. Hang on, something's not right. This candle right here is a big red flag, at which point in time this candle is literally a big red flag. But instead of it being in front of your face, you're sitting on it. Let's look at the weekly. Look at that weekly. Look at that weekly candle. Look at that big, thick red candle. Bearishly engulfing the entire thing. Let's look at our key area where we got rejected at. Okay, from the top of the range to the bottom of the range. That's our 2017, 2018 high. That's our, excuse me. That's our September 2019. This is when people like me are buying Ethereum at $80 and $90. Okay. Where did we make it to? We made it to 618, slightly above it, and then we got a massive rejection. Okay. Is this over? Sure looks like it to me, man. Sure looks like it to me. We've got one red histogram so far on the weekly. That's why it's so important to not only look at Bitcoin, not only look at Ethereum, but look at the relationship between them at the bottom and the top of a range. Bitcoin dominance. We talked about this specifically. Sold off deeper than I wanted to see. I thought we were gonna find support between the 0.5 and the 618. I thought we were gonna put in a higher low right here, and that was gonna be our ABC retracement. Okay, I was wrong. We went lower. We went down to the 786. We slightly overshot it. But look at this. What do we have? We have a bullish engulfing candle at the bottom of the range off of a key Fibonacci support. We have, last time, we got the bearish control zone, hard buy signal. Time before that, bearish control zone, hard buy signal. This is a weekly. I don't even look at the daily on this. And then here, bearish control zone, hard buy signal. So, you know, what do we expect to happen now? Well, I was wrong, and this is our bottom. I was wrong, and this is our bottom. And now where are we going? Realistically, we have a low, then we have a high, then we have a low. So that is our 0. That's our 1 right here. There's a 1 somewhere underneath there. There we go. That's our 1. I'm going to move it over just a little bit so you can see it in white. That's our 2. Okay, so we have a lower high, then we have a higher low. And now what do we expect to happen? Potentially bull run is over. At which point in time, we would expect our 3 to come up here and take out the top of the 1. So if that is in fact the case, I would expect us to come up to the 786 or the 886 from basically 100% Bitcoin dominance down to our low, which was 35% Bitcoin dominance. And then assuming this is essentially just an internal retrace and we're never going to go back to 100% Bitcoin dominance, which makes sense, we would top out basically somewhere at, like, say this one tops out at the 886, this one tops out at the 786, and then we go back down into another, basically retracement of our low to high right here, which would, again, we're looking way, way out into the future. Hypothetical, of course, at this point in time, but we would retrace the entire 5-wave structure, and then we'd expect it to come back down to essentially the 0.5 or the 618, somewhere around there, which is still higher than where we're at now. So, but again, I'm just using technical analysis. I'm not good at just like making stuff up, or I don't have Twitter. I don't have Instagram. I can't, react to Elon's tweets and then afterwards say that it's Elon's fault that things topped out or the market, capitulated or whatever. I use actual technical analysis. So, total market cap. Oh, look. Wow, look. After we bearishly engulfed that candle right there, we topped out. We got our divergence signal. Sell, buy, sell. Sell, buy, sell. Sell, buy, sell. Divergence, top of the range, exit the bullish control zone, multiple red histograms in a row on the weekly. I mean, look, soon I'm just going to be like that thing, and I'm not even going to just go and say the same stuff over and over again, because I'm sure you guys get tired of seeing the same exact thing on a chart before it plays out, and then after it plays out, and then me saying, oh, look, I was right. All right, so that's our, total market cap, and again, topped out at like 2.5, 2.6 trillion. Now we're at 1.4 trillion. So the market cap has lost a perceived value of 1.2 trillion. So the entire market crypto cap is down like, basically over 50% at this point in time. But all these shitbag coins are still ridiculous valuations. So does Bitcoin keep bleeding out? Maybe slightly. But at some point in time, people are going to realize these altcoins are trash and that they air quote, invested in some fictitious dream. I mean, guys, Cumrocket, Shiba Inu coin. Oh, Dogecoin's good, and Doge and Dog and crypto. So Shiba Inu. Why wouldn't that go to $1 trillion? Why wouldn't we have, a new parabolic bull run on Cumrocket? Why wouldn't Safe Moon be a good investment? It's safe. And it's also going to take us to the moon, guys. And Dave Portnoy said it's good. So it has to be good. Because Dave isn't the worst trader ever. Dave hasn't literally capitulated from everything. Dave didn't lose money in the stock market. Dave didn't lose money in Bitcoin. Dave didn't lose money in altcoins. Dave didn't do all of this publicly. And now he's endorsing Safe Moon? How about Dave Portnoy is a fucking dumbass? Okay? He's a moron. He's good at what he does that's not investing, that's not trading, okay? He's good at that. But at what we do, he's a moron. XDG, Dogecoin. Crossed the 821 to the downside, fell out of bed at 45 cents, and look what's happening. It's just draining value. There's no end in sight, okay? We're just capitulating down. We're just rolling over, all right? And what did we say about Doge? Well, when it starts breaking down from key levels, if Doge breaks down from 25 cents, where's it going? There's no support in here. It's going straight back down to 8 cents. So, if you're in Doge right now at 30 cents, it's going to 8, okay? And if it goes to 8 and it breaks down below that, I mean, maybe not. But if it breaks down from, our little 4 and 5 cent mark back here, where's it going after that? Well, look. No support. So, that's a one-day candle from 0.007 cents up to 0.0375 cents. Okay. So if we lose our 4 cents, then we're going straight back down to less than a penny. Does it get that low? I don't know. I mean, there's a pretty big cult now for Dogecoin. So maybe it never gets that low, but it looks like shit. Dogecoin looks like shit, which is what it is. It's a piece of shit, but it doesn't mean we didn't make a ton of money off of it. Divergence, sell by sell. Top of the range, never made it into the bullish control zone. This thing on the weekly couldn't even make it to the bullish control zone. How is that even possible? How is it even possible that Dogecoin went from our hard buy signal back here on the weekly up 27,158%, and it didn't even make it in the bullish control zone? Probably because like 5 people own all the Dogecoin and then everybody else is just, late to the party. Divergence signal, top of the range, multiple red histograms in a row. I mean, look, I'll see you at 8 cents before long. I mean, do we get a bounce off of 25 cents and get back up here to like 45 cents one last time? Maybe. Maybe we do. But look, this is not where you want to be when we enter a bear market. I'll tell you that much. Polka dot at key support, breaking down from it. Looks like shit. Strengthening to the downside. Look, I mean, all of these things are letting go. Where's our next support level on this thing? $10 maybe? It's another 50% to the downside from where we're at right now. $6. I mean, do we even want to fib these? I mean, we can. We could fib the bottom. We could fib the top. Where are we going? $11, $10, $8. Polka dot looks like shit. All of these, everything does. They all look like trash. Chain link broke down from key support. None of this stuff is a surprise. So where are we going next? Clear a little bit of this trash up. Where are we going next? We're basically at that previous support right here. So maybe that was our 1. Here's our 2. We're at the 3. We come down, retest the 4. I mean, I don't know, guys. Where were you on this thing? All right. I mean, God, we were buying freaking Link at $2.50 and it went to $45. That's wild. Hit our breakdown target perfectly. That's the measure move of our little sideways channel right here. Potential upside, downside. We got the move to the upside first. Throw over, came back down to the downside. Where's this thing going next? I don't know. $8. It doesn't even matter. There's no reason to even have targets for this stuff to the downside because they're just going to do what Bitcoin does. They're just going to do it like more intensely to the downside. ADA Cardano, where's Charles going? He's probably right now squatted down above all the Cardano investors, squatted over top of them, getting ready to give you guys a big old present. And look, it doesn't smell good, if you know what I'm saying. Hard sell at the top of the range. Cardano is a piece of shit. I'm sure that the people that were invested, quote unquote, and love Cardano did not sell any of it. They're not going to sell any of it because I'm sure Cardano is going to $1,000 and it's going to take over the whole world. I hate Cardano. I think Charles Hoskinson is a piece of shit. We're at support right now. If we break down from that support level, where are we going next? Back to 80 cents, another 50% to the downside. I mean, look, this thing's gonna, if this thing lets go, it's going to let go hard. Let's see what happened to Cardano in its previous bull run and bear market. And then we can get a more accurate idea of what to expect. So let's see. So Cardano went from all the way back here at 1.8 pennies up to $1.30. Not even that good of a bull run. Came down to the 886. So it lost 88.6%, probably closer to 90% of its value. And then it actually sold back off all the way to the bottom. So it basically lost 100% of its move here, okay? 90-something% loss to the downside. So what's going to happen this time? If I had a guess, I would say Cardano is probably going back down to 3 cents, 3.3 cents. Maybe it goes back down to 1.8 cents. Maybe it gives back the entire gain. At which point in time, I don't know. We'll have to see. But Cardano, shitcoin, Charles Hoskinson, piece of shit human being. XRP, there was one good trade ever in XRP. Not ever, but in this bull run. And it was at 17 cents. And if you guys want, I can pull up the video of me buying XRP at 17 cents. At which point in time it went up to $2. I told you guys about 17 cents is my target ahead of time. It's not like I surprised and said, hey, I bought it 17 cents. I took some profits along the way too. I took profits in here at 30 cents. That's what I always do. Sell half on the double. We called the breakout right here, the measure move. It went exponential at that point in time. We got up almost back to the 886. Didn't even get back to the all-time high. God, XRP is such a piece of shit. They should change the name to XR piece of shit. Maybe that's what the abbreviation is for. It's XRPOS. We're back down here already at the 200 exponential. We touched the 200 simple. This thing is just letting go. All the cultists right now are just probably like, they're drinking the Kool-Aid all on the way up here, and now they're slitting their wrists on the way down, and this is the blood just flowing out of them. XRP is total trash. Let's go to the weekly. We're below the 21. I mean, look, XRP is, at some point in time, the cult has got to just, all the cult members eventually drink the Kool-Aid and die. So I would think at some point in time, XRP goes away. Dash, or maybe it just takes over the entire monetary system and Swift gets dethroned and XRP takes over. Yeah, probably not. Probably not. Dash is even worse than XRP. This is one of the worst cryptos ever to exist. Barely got above the 618. Capitulated back down already to the 382. This thing is going lower. It's going much lower. Do we get some dead cat bounces along the way? Does Dash go back to $229? Maybe. But look, Dash is a piece of shit. Okay? If you bought Dash, you should second guess all your life decisions. Because the truth is, this is one of the least performing cryptos. If your goal and the way you trade and buy stuff is you look for the worst performing asset and then you buy that, you need to like start reading books and like taking courses and like studying. Because if you buy Dash, if you bought Dash at $35 or even at, $85 or whatever, I got respect for you. That's fine. You could buy Dash once it gets back above the 200 exponential, 200 simple moving average. You could ride it up. But if you are Gregory Mannarino and you're buying Dash at $300 and $400, even $200, you're telling people Dash is the new crypto that you're like bullish on. Gregory Mannarino should literally apologize to everybody that's ever watched his channel. All his quote unquote lions just got scalped, all right? And your boy is selling lion pelts on the side of the road because this thing is a total piece of shit. And anybody that ever tells you to invest in something like this, like Dash, be careful, man, because they don't know shit. BAT, basic attention token, it's dying. I thought we were gonna get up to $200, but it's rolling over. I told you when this thing's in a bull run, it's gonna underperform, and then when it's in a bear run, it's gonna underperform because a lot of people just got this for free. Fundamentally, I like this, but technically the chart looks like shit. We're below 200 exponential, below 200 simple. This thing's rolling over. We're at like key support levels back here, 40 cents or whatever. I mean, but look, there's no strength. It's all red, bearish control zone. I mean, but should you sell now at 60 cents? I mean, I'm not going to tell you what to do, but it's down 66% from the high. But I mean, shit, we got into this at, what was it? We got into this between, I think the majority of it was 25 cents. I'd have to go back and look. I believe it was 25 cents. So, but took profits along the way, obviously. So even now we're still up over 100%. That's fine, but it looks like shit. Riot blockchain looks like shit. Broke down from our descending triangle. Sold back off. Barely hanging on to the 200 exponential and simple. Can't get above the 8 moving average at the 236. Next target, $12 to the downside. After that, $6 to the downside. After that, $3.50 to the downside. I mean, this thing looks like death. Riot blockchain is a piece of shit. It looks horrible. MicroStrategy, piece of shit. Looks horrible. Made it up to $1,300, down to $450 now. I mean, if you're listening to Michael Saylor right now, God, you need to get your head checked. He's telling people to take out a second mortgage on their house. He's telling people to borrow money against their multi-generational family business that have their like kids and family members working at it so they can buy Bitcoin. That is not borrowing money and speculating on digital assets is not, that's not a store of value. That's not responsible investing. That's not maintaining your wealth. That is literally gambling. Okay. And look, this is his first bull market ever in Bitcoin. Prior to this bull market in Bitcoin, Michael Saylor was a bear on Bitcoin and cryptocurrencies. So what did he do? He drank the Kool-Aid. He didn't do his research. He got lucky on the bull run up. He basically ran a marketing campaign for crypto. It, basically turned his company into a Bitcoin ETF illegally. And now what is happening? It's bleeding out. It's bleeding out. MicroStrategy and Bitcoin are both bleeding out. MicroStrategy is just bleeding out faster. And then soon I imagine Michael Saylor is going to be bleeding out, because probably anybody that ever listened to him is probably going to be pissed. And I want to say he's saying that I want to say MicroStrategy with his most recent buy the dip $45,000 Bitcoin. His $45,000 Bitcoin purchase. That was his most recent acquisition. Pretty sure that took his cost basis to, he's claiming it's 25,000. My rough calculation was closer to 32,000. So he's either break even right now on his Bitcoin position, or maybe up like 50%. But how did he go from being up hundreds of percent to up 50%? Well, he kept buying on the way up when we were getting very clear signals that the market was done going up. So if you're listening to Michael Saylor and his comparisons between gold and Bitcoin and the store of value and all this stuff, you need to seriously reevaluate everything in your life. It might be too late at this point in time. But hearing him say things like mortgage your house, mortgage your family business, and buy Bitcoin, he's a dumbass, because he was saying that at $50,000, $45,000. Okay? We're at $35,000 now, and we went down to $30K. Michael Saylor is a fucking moron. Coinbase. It's easy for someone to look smart in a bull run on the way up. Okay? See if they look smart after a couple years. See if they have a record of looking smart, or see if they have a record of getting in trouble with the SEC. Because Michael Saylor has a record of getting in trouble with the SEC. Michael Saylor has paid millions of dollars of fines to the SEC to stop from going to jail. He is a scammer and almost bankrupted MicroStrategy previously and got in trouble for it. And now, I suspect in the next 1 to 3 years, the SEC will be up his ass again, and he'll be paying massive fines, and probably somebody's going to come after him, with, well, I'm not even going to say that because I don't want to incite violence, but he's not going to be very popular soon if this bull market does not resume. Coinbase still looks like shit. We closed the gap, like I said I expected us to, and then we got immediately a bearish sell-off. Potentially could find support at $224. I'd rather see a retest down here. We're seeing no life out of Coinbase. I called the exact top of crypto and Coinbase. Told you this is exactly what tops of markets look like. We got NFTs. We got Coinbase with its, public offering. We got, Dogecoin going parabolic. We got Elon Musk going on Saturday Night Live. I told you guys, buy the rumor, sell the news, is my opinion, what I was doing. Not financial advice. I'm not your financial advisors. Markets are extremely volatile. Please do your own research. Trade responsible. Coinbase is a piece of shit. But, however, Coinbase does not have to be directly correlated to crypto and Bitcoin, because they make all their money on fees, on trading fees. Okay? So even though they've made millions of dollars and they have this like $1 billion valuation and they can't keep their site up during high volatility because they're a piece of shit exchange, even though all that is true, this does not have to just keep selling off and keep going down. We could easily see Coinbase carve out a bottom right here and then at least see a decent retrace back to the upside. Did we hit my target of the 3.618 and the 4.236 perfectly? Yes, we did 100%. Did we hit my target of the 2.618 before that last dead cat bounce? Yes, we did 100%. Could we continue to the downside? Yes, we could 100%. Is it possible, though, that we're carving out a bottom here and we could see a little life out of Coinbase in the near future? Yeah, there's potential for sure. But we got to wait and see. There's no reason to buy this thing when it's in free fall. Everyone that's ever bought this thing since its public offering is upside down. So do you want to join the club of losers that bought Coinbase, or do you want to wait? I say we wait. Let's not join the Gregory Mannarino Coinbase loser club just yet. We got all the time in our life to lose our money doing dumb shit. Let's not do it right now. I'm going to jump over and chat real quick. Then we're going to look at the commodities, and then we're going to rip through these last commodities. 2 hours and 23 minutes. I take too long on these rants for sure. All right, so we got K Ols 93 saying laugh my ass off. Glad you find me entertaining, my man. I try to keep it real and funny also. Try to make my rants at least somewhat enjoyable. Bubbly says buy the Bitcoins. You won't be able to buy any more Bitcoins. Yeah, last chance to buy. Last chance to buy below 50,000. Last chance below 60,000. It'll never dip. K.O. says, why buy the dip? Because meme pages on Instagram, bro. Trading has a cult now. Yeah, I mean, look, this is how you know these markets were going to get wrecked. Because TikTokers, what are TikTokers doing? They're doing booty dances and twerks and telling you how to get to be a millionaire buying cryptos and stocks that have already gone parabolic. So if you're taking financial advice from TikTok, a little kiddie app made for children that are like basically acting like sex workers and never been involved in a bull run market before, first time quote unquote investors in the middle of a parabolic bull run in everything in existence that you can't lose money in, and in between them giving you financial advice, they're like twerking in their what are they called, the little tights they wear where you could basically see inside of them. If you're taking your advice from TikTokers holding up prop money and twerking, probably should have your head examined. So, but I don't have a TikTok. Maybe it's full of, quality people and there's like great wholesome content on there. But I know the videos that pop up on YouTube of TikTok, the ones that I've watched before, are mostly just like one song playing and then a cycle of like 30 different girls, like basically like doing things that their parents would probably not approve of. So when Lambo, if you didn't get a Lambo in this bull run, you should probably be careful of listening to people now who are saying when Lambo, where Lambo, etc. Our kid says, I came for the SEC. Oh, wait, I can't for the SEC. I can't wait for the SEC to go after Saylor and be a thorn in Tesla's ass due to Elon and his antics. Yeah, I will literally, if there's a betting average or betting odds or whatever on the SEC charging Elon Musk, Michael Saylor, and Dave Portnoy, I'll take those odds. I don't care what they are. I will take those odds. I will bet on the SEC going after each of those people, okay? Because here's your thing. Here's why. Michael Saylor has specifically talked about Bitcoin mostly, but he's the owner of a publicly traded company, MicroStrategy. Therefore, MicroStrategy obviously a security. Therefore, SEC coming after his ass. Elon Musk has had problems and has had, Michael Saylor has literally paid millions of dollars to the SEC and almost lost control of his company because of his crazy lying, cheating antics. He was literally doctoring the books. So would not be surprised. As a matter of fact, I would literally bet money they come after him. Elon Musk, owner of a publicly traded company. Problems with the SEC in the past. Pumping Tesla, he's not allowed to talk about Tesla, but has. Pumping Dogecoin, which is clearly a security. SEC coming after his ass. Dave Portnoy, at the time, owner of Barstool Sports, and was going on social media and live picking stocks using, what are they called? Scrabble tokens. And literally saying, we're pumping dumping, guys. We're pumping dumping. Dave Portnoy. All the money you raise for small businesses is great. Barstool Sports is entertaining. You're a funny guy. You talk funny. You say funny things. You review pizza joints in New York. Great, dude. That's awesome. But the SEC is coming after your ass, okay? And they're going to bend you over and they're going to roll one of those pieces of pizza up, okay? And they're going to feed it to you from the bottom end. Fucking idiots. And I can't believe how shitty our government is that they take so damn long to stop this type of shit happening. Because I feel bad for all those poor people out there that listen to these dumb fucks. Imagine a TikTok coin. It'll go ballistic. Yeah, I can't believe there's not a TikTok thought coin or something like that already. Maybe we should make that, guys. Maybe we should make TikTok thought coin. Okay. And every time you buy it, you get an NFT of some thought twerking, and God knows if she's even 18 years old. I mean, I can't believe this shit that goes on. If this isn't the biggest bubble ever, if this doesn't dwarf the internet bubble, I mean, nothing will ever. So many people are going to get wrecked. I mean, a lot of people already have gotten wrecked with leverage and a 50% sell-off. Oh, and I wanted to mention that too. Why is 50% so important? Why is it so important that these things sell off 50%? Because you know what that means? Anybody using leverage 2x or more gets liquidated, okay? If you use 2x leverage and you lose 50%, you lose 100%, you're liquidated. Margin call, Papa Crypto is coming for you. He's coming for your house. He's coming for your family. He's coming for your car. And look, I'm going to tell you the truth too. Master Splinter, he's coming for your wife as well. And I'm going to lay that wood down. Fucking morons. God damn, people are so stupid. These fucking idiots. All right, gold. We got the break out of our descending channel. We got the break out of our resistance right here. Is this a descending broadening wedge? Did we get the breakout from it? Yes, we did technically. Are we expecting to get the triple top right here at that red resistance at just under $2,000? Also a very substantial resistance based on the previous history of Goldilocks. Yes, we are. Okay. Previous all-time high on gold was like $1,915. You know, we busted above it, got that throw over, sold off, retest, breakdown, retest, breakdown. One more retest. Maybe we break through it. I doubt it though. I think first time we come back up, we test it, then we come back down to one of these key fib levels. I am bullish on gold in the long term, but I don't believe inflation. I've been saying forever, you guys know how I feel about inflation. I haven't talked about it as much lately, but this is all, I mean, I hate to ever agree with Jerome Powell. I think him and Dr. Fauci should get put into like a cage and have to fight to the death. And then the loser of that should have to fight a lion to the death. Or I guess they're both like little midgets. So they should have to fight like a bobcat to the death. And then the winner of that, can live. But in my opinion, Jerome Powell is a piece of shit, and I hate to ever agree with him. But honestly, I think this inflation is transitory. It's supply chain constraints. The supply chain is breaking down. This is FOMO inflation. They come on and they say, there's going to be inflation. There's going to be inflation. We're going to let it run hot. So everybody says, oh my God, there's going to be inflation. So everybody runs out and buys a bunch of shit that they think they need because it's going to be more expensive in the future. They buy up all this random bullshit, food, that's cool, man. Ammo, that's cool, man. But they buy all this other shit too that they don't need, like a ton of toilet paper, because toilet paper is going to cost more in the future. And so they're just going to invest in all the toilet paper they need forever. What kind of fucking moron rushes out and buys this toilet paper? If we go into a breakdown of society, you mean to tell me the number one thing you're worried about is where you're going to wipe your ass at? That's what you're worried about? Oh my God, people are so fucking stupid. It's hilarious. Oh my God, it's the end of the world. We got to rush out and buy as much toilet paper as we can because we're going to need to wipe our ass because we're not going to be able to find anything else to wipe our ass on ever. Idiots. That doesn't tell you how stupid people are. Nothing will. I think gold's going to get up here a little higher and top out, come back down, at which point in time we could easily keep moving to the upside, but I'm not convinced we're in this inflationary environment. I think we got a nice little double bottom off some key support levels, but it's not unrealistic for me to think gold is heading lower. And you know what that's going to do? It's going to disrupt everything that everybody's been saying. Rates start going up, gold starts going down. That's what I think is going to happen, but we'll have to see. I mean, I'm obviously, gold is my savings account. I always buy gold, all right? That's where I put shit, so I don't have to worry about if it goes up or down. I also don't sell any, so I don't have to worry about what it costs. I don't got to worry about what it's worth. Silver. I mean, look, we got a nice little ascending trend line, breakdown, nice little ascending trend line. If we break down from it, we're going to come back down and retest this other slope line, But we've been in this range forever, and I've been saying we're going to stay in the range. $22.50 to $30. That's our range. We're going sideways. The premiums are ridiculous. Everybody's bullish on silver. Here's one reason not to be bullish on silver. I love silver. I'm massively bullish on silver in the long run. But you got to understand, when you buy gold and silver can take 30 years for a cycle to go by. So if you're buying gold and silver, you're buying that shit for potential 30 years from now. Okay? Because if you're upside down on for 30 years, are you still going to be bullish? Probably not. When did I say buy gold? I was buying gold on the breakout, 1300. Good purchase. When did I say I was buying gold? When did I buy a ton of silver rather? $14 to $16, even $21. Let's be real, guys. Look at this gold to silver chart. Zag. This was our top right here at 130 to 1. That's 130 ounces of silver to 1 ounce of gold. We have a very clear descending trend line in red. Very clear ascending trend line in green. Support, resistance. We then, inside of that range, started forming this orange trend line. Okay? We have a shitload of touches on that orange trend line. Resistance, 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 boom. We have broken through it now. We broke through the red one. The measure move of the red one is 87 pieces of silver to 1 piece of gold. The breakout of the smaller wedge is going to be 84. So between 84 and 87, the Fibonacci extension from the top, Fibonacci retrace from the top to the bottom, 0.5 to 618 level is roughly like 90. Well, it's roughly, let's say the 0.5, roughly 90. Okay, 90 ounces of silver to 1 ounce of gold. Right now we're at 68, and all the silver people are saying, we could go to 1 to 1. I heard someone actually say that silver could be valued as 1 ounce of silver to 1 ounce of gold. 1 ounce of silver is going to equal 1 ounce of gold. People are fucking stupid. 90 to 1 is more likely. I will bet everything that gold and silver are never traded 1 to 1 ratio. People are so stupid. It's absolutely unbelievable. This thing is in an uptrend. Let's go to a longer time frame. This is the daily. Let's go to the weekly. We have a confirmed breakout right here in green. We are now getting a retest of that level. We are in a very clear, we put in bullish divergence, specifically talked about this low here and this low here and the bullish divergence taking place. Specifically talked about this low here and this low here and the bullish divergence taking place. Bullish divergence taking place. This chart is exhibiting bullish divergence at the bottom of a massive sell-off, okay, and breaking through key levels of resistance. What is going to happen with the gold-silver ratio? It is going to cost 50% more silver to buy 1 ounce of gold very soon. What does that mean? Gold's going to go up very fast. Gold and silver is going to go up less fast. Gold's going to go up fast and silver is going to stay in the same spot. Gold's going to go down a little bit and silver is going to go down a lot. Those are the three situations. Or gold goes down. No, yeah, I think we nailed them all. Yeah, so let's look at the last time this happened. Okay, does this look familiar to you? We parabolic spike to the upside, all-time high on gold-silver ratio, then a massive sell-off to a new low. Okay, parabolic high, all-time high on gold-silver ratio, which almost lines up perfectly with the 1.618. Matter of fact, if you go to the close right here, it actually lines up perfectly with the 1.618 Fibonacci extension of the previous all-time high. Okay, so now what's likely to happen? Parabolic, sell-off, breakout. Okay, parabolic, sell-off, breakout. Okay, where does it go? To the 0.5. Where do I expect it to go again? To the 0.5. At which point in time I expect silver to become massively, go on a massive bull run in relation to gold. That's when silver goes to $90. That's when silver goes to $120, $200, $500. When we get to that phase, we are not in that phase right now. This is our A, this is our B, that's our C. Okay? Let's put one up for the current price action. This is our A, this is our B, this is our C. Where do we go with this C? I mean, we made an all-time high here. We made an all-time low here based on this chart, okay? Historically, silver was like 10 pieces of silver is 1 gold in like the Bible and shit like that, or 20 or something like that. This chart goes back only to like 2006. Here at the bottom is 30 bucks, okay? So the real question is, do we go down and form essentially a giant broadening wedge where we have a high, then a higher high, a low, then a lower low, and we come back down here and we go back down to like 10 to 1 or 5 to 1, or if you're some crackhead, 1 to 1? I mean, maybe. But, realistically, we don't know yet. We don't have enough price history to tell. So we could easily, bottom out at the 618 at 52 silvers to 1 gold, or the 76 is 42 silvers to 1 gold. The 886.35 silvers to 1 gold. We got to wait and see. I mean, I can't honestly tell you 100% right now. I really don't know. I do know in the long run, based on this chart and technical analysis, that silver will go parabolic in relation to gold and based on everything that's ever happened. But I can't tell you specifically, what's going to happen. I can tell you, though, that there's massive bullish divergence and that means gold is going to be way more valuable in relation to silver in the near future. So, again, we got to see how it plays out. I'm just moving this, and I'm going to use this ABC line so I can get rid of one of these random lines, just so I don't need an extra line on the chart. But, maybe I'm wrong, okay? Maybe I'm wrong, and gold and silver are 1-to-1. And you know what? I'll admit it, and I'll say I'm sorry. I was wrong. But you know what? Probably fucking not. Probably not. Probably fucking not. But you know what? I can be cocky. I can be arrogant. Because I'm making that money. My TA works over and over again. And if you don't believe me, you just watch my videos. Because it's all out here for everybody to see. I don't go back and delete my videos like these idiots. Platinum, got that. Look, this is do or die on platinum right now. All right? Do or die on platinum right now. We broke out of the little channel right here. We broke out of this guy right here. Orange resistance, orange support. We broke down from it. All right? We came down to it, got rejected. It was very clear with this candle, we were going lower. It was very clear with this candle, we were going lower. Very clear with this candle. These actually 2 candles, we were going lower. So now we broke down from that. But where are we still at? We're still inside the big daddy, the big channel, okay? We got a very clear resistance, very clear support, and we're at support right now. So this is it. It's do or die, okay? We broke down to the bottom of the channel. This is the buy zone. If we break down from here and start closing below this, I'm going to eat my words on platinum and say I was wrong, okay? Because I honestly thought platinum was going to go back in line 1-to-1 with gold. So maybe gold's selling off faster and they do go back to 1-to-1, but I doubt it. If platinum breaks down from here, I don't think gold goes back down to $1,200 an ounce. I don't think it's possible. I mean, it's possible, but I don't think it's likely. I think more likely than not, platinum is going to go parabolic from right here, and that this is our 4, that we just put in our 4. Basically where I said we were going to put in our 4, where I thought we were going to put in our 4. Is it possible we break down from here? 100%. But I am taking, when I say I'm taking a long position on platinum, what I mean is I'm buying platinum right now, physical platinum right now, off of this level right here. This was the trade setup we were looking for, and now here it is. It's staring us right in the face. And where is it going to take us back up to? Top of the channel, okay? We can tighten up this stop loss now because we don't need this big boy stop loss anymore. We can put it at, 5%. But I mean, realistically, like I said, I don't sell my metals. I accumulate metals when they're undervalued in relation to other asset classes or other metals. So 2-to-1 ratio to the top of our little baby channel, or this is the one I'm really looking for. This is the one that gets me excited, okay? 35% back to the top of the range and back in line with gold at like 1,600 or higher, okay? And that's just getting back into the top of the channel for that wave 5, okay? If we start looking at Fibonacci extensions of our previous waves, all right, let's look at, do we have a Fib extension on this one? I want to say that we do. Our 1.618 is 1512. Our 2.618 is our target up here at 1826. Our 3.618 is $2,212 platinum, okay? That fatty platty, 100% gains. That fucking platinum. Uranium. I still like uranium. I'm massively bullish on uranium. I think it's the future for energy. It's in massive bear market forever, and it's still massively undervalued. Probably one of, if not the most undervalued, commodity right now. But are we going to top out right here? I mean, there's a good possibility, at least for now. At least a temporary top for right now. This is our downtrend from 2011 of death. The downtrend of death from, this is URA, actually. This is not like actual uranium. This is like an ETF. But it was 133, and it went down to $7, okay? At which point in time, it bounced back to the 236. We're now at the 382. We've got the 821 cross. We're back above 200 exponential moving averages on the weekly. We're at the 377 moving average. Next target's a 528 and the 0.5. You guys know I'm long on this, obviously. Anybody that's been around for a while, I expect this to get back to $30. After that, potentially, I'm going to be taking profits on this like always because I'm not a greedy fuck who just buys and holds forever because when Lambo, next target is 151% move to the upside. Again, it's a 30% stop loss, but it's not really a stop loss. It's just accumulating more. After that, what's our next target? What's our next target? Up here, $69. Eventually, I expect this to make new highs, though. So at that point in time, $133. But it's internal until it's not. But, this is obviously bullish on the weekly. If we flip out to the monthly, look at this monthly. We've got a clear slope line. We're above the slope. We're in the bullish control zone. We got the hard buy out of the bearish control zone. We got our sweet, sweet bullish divergence. If that don't get you excited, bullish divergence off the bottom, off a new all-time low on uranium stocks. Let's fucking go, okay? But you're not going to get rich off this. UEC, it's more like blue chip type stuff. Not really blue chip, but it's like that. Yeah, I shouldn't even make that comparison. UEC, Uranium Energy Corp. I think we bought this. What would we buy this at? I think it was like $1.30 or something like that. Like right in here. Above the 200, 821 cross. I think I bought again at $2. What was it right here? On the breakout at $2. We bought again. Made it up to like $4. Took some profits along the way. I still love this. I love UEC. It's thick and juicy. And people like shit that's cheap. People like $1, $2, $3, $4 stocks because you get a lot of them. But there's a good possibility this already topped out and it's coming back down to $2. At which point in time I'll buy more. Again, looking at the long-term chart, I gotta speed this up. I'm taking too long on all these. Looking at the long-term chart, series of lower highs, high, lower high, lower high. If we get back up here to our 5, it'll still be a lower high. At which point in time, maybe we sell back off. Maybe this takes 5 or 10 more years going back down. But essentially, what do we have? We have a high, a lower high, a lower high. We have a low. We have a higher low. I would expect it to come back down to another higher low. So can this ever get back down to like 75 cents? Could this ever go lower than $1? For sure, but I expect this 5-wave structure to complete before then. And, I expect it to complete somewhere up near like 6 something. So still another 100% move to the upside, but I'd rather buy again at $2 and then ride it to 6 for like, the 3x. So, but again, bullish divergence on the monthly, bullish divergence on the monthly. If that doesn't get you excited, I don't know what does. If you don't believe in bullish and bearish divergence, and that's how you can easily make money and moving averages and Fibonacci extensions, I don't know what you believe in. You certainly don't believe in reality because that's how you make that money easy. CCJ, Cameco, last uranium stock we're looking at. Same thing, massively bullish on this, blah, 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 blah. Potentially topping out, blah, 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 blah. USAS, I told you guys I was buying this last week. I did buy this last week. I bought a bunch of it last week. This is exactly where I bought last week. I think my entry was $1.64, I want to say. But, there's no secret. I told you guys I was buying a shitload of this. And it was still at that same price point. It's up slightly. It's at $1.72 right now. So, I'm ready to take profits. I'm just kidding. Let's look at this chart on the big boy time frame. This is USAS, American Gold and Silver Corp. Maybe it capitulates. Maybe it dumps. Maybe it leaves. Maybe I'm wrong. But, what do we have? We have a massive high up here at like $20-something. We have a massive low down here at 50 cents. Internal retracement, a low, a higher low, a higher low, a higher low. We'll have to see what this monthly ends up like, but looks good to me. Looks real good to me, or I wouldn't have bought it, obviously. I normally don't like to buy shit charts, but when they look this juicy, I can't help myself. Let's look at this pattern. We have a downtrend. We have a flag. Okay, so predominantly this will break in the direction of the predominant downtrend, predominant trend. So more often than not, this will actually break to the downside. I'm betting against that because we had support right here, support right here. I'm betting this is support again, and we continue to fill out this pattern. This is resistance. That's resistance, resistance, resistance. I'm betting we come back up here again, and it acts as resistance. Does it break down from this range and come back down lower? Does it break up from this range and come back higher? I don't know. I don't care. Because right now, what I'm focused on is this trade right here. 71% to the upside, 11% stop loss. 7-to-1 risk-reward ratio. I like it. It's juicy. I like, well, it's 6.3, I think, because I have slightly higher stop loss. But in all reality, 6-to-1 risk-reward ratio. I like that. Okay? I'll be wrong and I'll lose 10%. I'll be right and I'll gain 70%. So that's juicy to me. But yeah, looks good. Still looks good. It's up 7% from where we bought it. It's up like 3.5%. It's 3.5% from where we bought it. So looks good so far. But, you know, am I ready to count my chickens? Nah, not quite yet. But do I still feel confident? Yeah, I mean, it doesn't matter. I can be wrong 7 times in a row on a trade like this. All I got to do is be right once and I'm back to even. So am I going to be wrong 7 times in a row? No, I'm not. Maybe anything's possible. But if I had a bet, which I do by buying things with money or selling things with money, I would bet I'm not going to be wrong. Silver Juniors looks good. Retesting the highs again. Looks good, but we really got to see. I mean, it's hard for me to even judge the silver chart right now just because I expect it to do, you know, whatever the gold chart does. And that gold-silver ratio chart, I don't like how that looks, so it's hard for me to get bullish on silver. But, you know, I'm obviously invested in Silver Juniors. First Majestic's one of my favorites. We made it back down. You know, I called the top through here. This was ridiculous. Absolutely idiotic. I sold at like $20-something in here. Sold more when we retested it at the 886. You know, this was like a Reddit pump and dump. FOMO silver, you know, when everybody thought we were going to break out. We came back down here, retested the 4, got the buy zone, accumulated more. You know, I'm back in massive profit again on this. Where did I buy at? I want to say it was 15. I think I bought it 15. So we're up like 16, 17% on this right now. I expect it to go higher. I don't know what's going to happen in the meantime. Technically a bearish trend. It's a descending triangle, a high, a low, a lower high. We'll have to see what happens. Again, we're seeing a bunch of bullishness start to develop in here. But this is what I'm really paying attention to. Look at this First Majestic chart. If this doesn't get you excited below the waist, I don't know what does. I do know what does, but actually I don't know what does. This day and age, I don't know if it's going to be men, women, animals. I don't even care. People are fucking weird. But this, regardless of all that, if you're watching my channel, this should excite you. It excites me. Giant triangle, broke through the triangle. Let's get this shit out of the way. We broke through the triangle, came back down, retested it. I told you before we even broke that I wanted to see this big thickie bust out through the triangle, come back down, get that retest. What did we do? We got the retest to the T. We took the buy off of the resistance, flip support. This thing excites me, okay? I can feel the blood leaving my head and flowing south right now just thinking about it. Because my target on this is $35 minimum. My maximum target on this for the 1.618 is $117. That's like an 11x from where we're at right now. No, that's not an 11x. From the buy to the 1.618, it's a 770% move to the upside. Oh, fucking yeah. Let's go, baby. Let's fucking go. Break through the bottom. I'm wrong. So 50%, obviously I would never take a trade with a 50% stop loss. 50% to the downside, 760% to the upside. Let's fucking go. Let's go, First Majestic. Show me the money. Say it in the chat right now. Let's go, First Majestic, and show me the money, baby. THCX, going to them weed stocks, them dots. This is the Spinnaker ETF. Look, This is a value investment as far as I'm concerned. You know, it's an internal retracement. We broke above the 200 exponential and simple moving average, got a parabolic run, come back down, retest. Still got a nice slope to the upside, buying opportunity. This is my buy area. I'm accumulating through this area. We touched my buy zone perfectly. You know, I've got my trade setups in place. It's no secret what I'm looking for. I'm looking for that 1.618. I'm looking for that new all-time. Oh, we already broke the all-time high. I didn't even notice that. I'm looking for that 1.618 up here at $50. I'm looking for that 220% move. I'm looking for the big thickie. I'm looking for the 2.618, the 569%, baby. Let's go. But maybe not. Maybe it just goes to zero and everybody that ever smoked pot, ate an edible, or used some CBD just randomly dies or gets abducted by aliens. Maybe God comes down and strikes down all those evil potheads and this thing goes to zero and I'm wrong. But I like my odds. I like my fucking odds. YOLO, you only live once, baby, so why not buy that YOLO stock? This is like a meme stock almost to me, like this ETF, the pure cannabis ETF, like it's called YOLO, so it's got to be a joke. But at the same time, we got a high, we got a low, we got a higher high, we're in an uptrend, we got a parabolic uptrend on the 200 exponential and simple moving average. We're above the 377. We don't even got a 528 because it doesn't even exist yet on the daily. We're finding support at my key level, at the bottom of the range. We've got this sweet wedge pattern. We're looking for that break, that fucking 618 retrace to the upside. I'm looking for that $25 target. I know it ain't much, guys. It's not enough to get excited on, but, you know, it's a start. Got to start somewhere. After that, we're looking for that $44. We're looking for that $77. Is this going to make you rich? YOLO? No, I don't think so. But, I mean, it's going to put some profits in the bank, some gas in the tank, if you know what I'm saying. Tilray, now let's get fucking excited. Okay, this stock excites me. This thing fucking makes me excited. When I think about Tilray at night, I can't sleep. Previous all-time high, parabolic all-time high, $300, okay? Low, back down here, $2.50. You will notice that this does not have a direct correlation to the stock market. The stock market was still putting in all-time highs. This thing was in a bear market from that all-time high. Pot stocks got crushed from September 2018 all the way down and put in their lows in March 2020. They still not have reached all-time highs. So what does that mean? They're underperformers? Yeah, maybe. Is this Dash? Is this just the Dash chart? Is this the trash chart? Is this Dash? Maybe. I mean, maybe. Maybe I'll be wrong on this one. Maybe I get crushed on Tilray. But you know what? With proper position size management, with fucking proper risk to reward ratio and probability of success, I think there's a better chance that this thing makes me rich than poorer. I bet we make that money, baby. We got the buy zone off of the top of the one. The top of the 3 was up here at the 65. We come back down. If you haven't seen me do this in depth before, you know, do it. This is the area we bounce, all right, on the weekly. Or maybe I'm wrong and we sell off deeper and I'll start going negative on this trade. It's possible, but I'm not giving up just yet. I mean, we've got that 30% drawdown in place with a 600% move to the upside. We got that retest of the all-time highs from that $15 Tilray up to that $300 Tilray, talking about that 1,842%. Are we looking at Dogecoin right now? Or is this fucking Tilray? Okay? That's a 60x. No, that's a 60 to 1 risk reward ratio. Okay? But let's look at that 1.236. Okay? Let's look at that 1.236. That's a $1,000 Tilray. You buy Tilray at $15 and it goes to 1,000. I guarantee you're getting divorced. Okay? Because you're going to throw your wife in the trash and you're going to become a Mormon and you're going to get 5 wives. You're going to get 10 wives. If Tilray fucking goes up 6,737%. Fuck yeah. Tilray. Or it goes to zero. Or it goes to zero. Or it goes full on Dash. And then I'm fucking laughing about this stupid ass trash bag Tilray. But I don't think so, bro. ACB, Got that fucking dirty chart. Okay, look, I don't like the long-term chart on this because that like reverse stock split and everything. So I don't look at the targets in the same way on this. So let's look at this very clear pattern we're developing. We have been developing. Let's look at that clear pattern I called out way back here and expected it to develop. Upside down, inverted, head and shoulders, okay? Break out on the head and shoulders, measure move to the upside. It's not that juicy, okay? It's from the head to the neckline, all right? Get the breakout to the upside. It's going to take us up to $33.99. What were we buying? What were we buying this bad boy at? Like $7 fucking dollars. All right. So again, it's no Tilray, but looks good. We got bullish divergence on a lot of these things. Okay. We got some bullish divergence on a lot of these things. We got a 377% move to the upside. Okay. Am I buying Tilray? Did I tell you when I was buying Tilray? Did I tell you when I was buying ACV? Did I tell you about them pot stocks, them value investments? Did I tell you about that commodity bull cycle? Did I tell you about the fucking gains we're about to make? Or we lose it all? I don't know. I don't know, guys. 832% to the upside, and that's just the 786 retrace. That's not even an external retrace. That's not even a new all-time high. But again, I don't look at this one the same way because of that reverse stock split and shit. Pot stocks make me happy. Caterpillar still looks good. We're in that sweet uptrend. Last time we did this, we went in that sweet uptrend. We broke out to the upside, went parabolic, and then we sold off a shitload. So massively bullish on this thing. You know, we got that another entry right here. Came back up, retest again. I don't like that it's hanging out at the bottom of the range. I do expect this to get crushed at some point in time. This is our weekly chart. Let's go to the monthly. I do expect this to get crushed at some point in time, but not quite yet. I'm not quite ready yet. I want to see it go up to either, and again, this is based on technical analysis, not just, you know, what I want to see. The 1.618, $265. That's my target. Does it top out there? Maybe. Does it go to 2.618? Maybe. This is a blue stock. And then also Deere, John Deere. That Deere and Company, DE. I gave her the D. The DE. You know, we got basically this channel. We were hanging out on the heartline. Heartline. Broke down from the heartline. Do we find support at the bottom of the channel? Yeah, probably. If we break down from this, where are we going? Measure move of the channel, 270. If we start getting crazy and we throw a couple Fibonacci Dandachi, tell your wife, call the mariachi, because the music's playing. This thing's about to die. 382, $241. Okay. First target is the 236 at 294. I don't think we're going there yet. 242, the 0.5, 204. I am massively bullish on Caterpillar and Deere. But look, there's fundamental reasons that this might be shitty and might not be bullish. Okay. What are those reasons? Let's see. We got a bunch of dumbasses in office right now that are wasting money on quote unquote infrastructure. We're going to spend $2 trillion on infrastructure, and we're going to do it while everything's the most expensive it's ever been, because we're fucking moron politicians and we've never actually run a business and we don't understand shit about money or economies or fucking anything. All we know is that we're dumb fucks and we can barely do speeches because we're old as fuck, and all we've ever done is be in office and be a dumbass. So, and I'm not talking about anyone in particular, especially not the President of the United States, who can't even barely complete a fucking sentence. Look, if you're going to get bearish on John Deere and Caterpillar, a good reason to do it is because we got dumbasses trying to build infrastructure. And by build infrastructure, I mean childcare. How about roads and bridges? How about no more lead pipes for people in the United States getting their drinking water from it? That's infrastructure. We don't need a giant rail train. We don't need a fucking bullet train. We don't need supersonic jets. We don't need Nancy Pelosi fucking subways from San Francisco to, I can't even remember where it is. That's not infrastructure. That's bullshit is what that is. Fucking morons. Lumber. Okay, look. I told you guys lumber was going to capitulate up here at the top. Lumber capitulates. And then I hear everybody saying, lumber's going lower. Lumber's going to die. It already did. And then it bounces from then. And now everybody's saying, lumber's going higher. Lumber's going up. It's hindsight TA to its finest. Okay. Look, let's look at this chart. Bearish control zone, sells back off, bullish divergence. That's a buy on lumber out of the bearish control zone. Bullish divergence, hard buy, massive parabolic run. Hard buy off of the bearish control zone. Hard buy off the bearish control zone, parabolic run. Hard buy off the bearish control zone, parabolic run. So what's going to happen this time? Hard buy off the bearish control zone, parabolic run? Maybe? I don't know. We'll have to see. I mean, I'm not going to buy lumber. I'm trying to do some modifications. I'm trying to get wood. You know what I'm saying? But I'm not getting it now. I'm doing what smart people are doing. I'm doing what home builders are doing. I'm doing what anybody is doing right now. And I'm just waiting for the price to come back down because I know it's not sustainable. There's a shitload of lumber just sitting around and it's supply constraint because they can't move it or they don't want to move it because all it's doing is going up. If you have an asset and all it's doing is going up and you just figure, well, it's just going to keep going up, why should I sell any of it now? That's what they're doing with wood right now. Copper, did it top out? Like I said, maybe. I don't know. I'm looking for a retrace on copper. I'm not buying any more copper. This is CPER, one of the indexes. There's a bunch of other ones you can invest in. If you're out buying physical copper, you're a fucking moron, okay? People see the price on copper. I constantly see people saying, I'm buying physical copper places. Give me a second to breathe before I talk about how stupid people are. When you look at the price of copper, it's in pounds. When you buy copper, physical copper, it's in ounces. So you think you're getting a good deal because you bought an ounce of copper for $1.80 an ounce when copper is $4 a pound. There is 16 ounces in a pound. So if copper is $4 a pound and you're buying it because you're getting a deal for $1.60 an ounce, where is all the rest of the money going? It's going into the you're a fucking moron fund. I got to get off here soon because I'm just out of control. People are so fucking stupid. That's how you can tell we're in a bubble. Our whole lives are in a bubble, okay? I half expect aliens to come down and reveal themselves like in that movie. What was that? Oh my God. What was that movie from like the late 90s, early 2000s where the like big head brain aliens with the bubbles on their head come down and they have like the laser guns and all the like people are like, oh, welcome, welcome. And they're like, show us your leaders. And then they like kill everybody. And then they're like, oh, sorry, that was an accident. And then like they meet back up with them again and then they kill everybody again. I can't remember. What was that? What was the name of that movie? I cannot fucking remember what it was, but it's so funny because that's literally our reality right now. People are so fucking stupid. It blows my mind right now. Everybody and their mom is a technical analyst and an investor. I'm an investor. I'm investing in physical copper. People are so stupid. It's like fucking hilarious. God, I can't even deal with this right now. I'm getting off here. This is our last chart for today anyway, guys. Let's look at it on a longer time frame. Let's look at that monthly copper. Okay, when was a good time to get bullish on copper? Back here, when we had that sweet bullish divergence taking place. That bullish divergence. Okay, that was a good time. How about the hard buy, hard sell, hard buy, the divergence signal at the bottom of the range? That's when you get bullish on copper. That was back here on the monthly before the parabolic uptrend, before it went 107% to the upside, before it started putting in a shooting star doji candle at the top of the range at the previous all-time high. Okay, it's coming back down, in my opinion, to what essentially will work out to, basically a potential 1, a 2 retest, or maybe that's not even going to be the one. Maybe we come lower, but I'll be looking for this at like $21. But again, you're not going to get rich off this. I am massively bullish on copper in the long run. We need it for infrastructure. We need it for energy. We need it for EV. We need it for everything. we need to make our sweet, sweet pennies out of so we can stamp Abraham Lincoln's face on a piece of currency that's outdated by like 10 decades. Because who the fuck, why do we need pennies? Why do we even have pennies? Why do we even have dimes and nickels? I mean, like at what point in time do we just say, let's just price shit in quarters and dollars? Like, how our whole system is so outdated. There's too many fucking old people, and all the young people are dumb as hell, and the people in the middle are just looking to the old people like, God, when are y'all just gonna fucking die off, you idiots? And we're looking down at the young people and saying, when are y'all just gonna fucking die off, you idiots? And there's just gonna be a bunch of middle-aged people left that still have brains, and everybody else is gonna be gone. All the young people will have killed themselves from drinking bleach and Tide Pods and filming TikToks in the middle of highways and getting hit by cars. And all the old people will be dead from old age. And all of us in the middle will just be sitting here like, yep, not surprised. Not surprised. So, yep, copper potentially topping out. You know, potential bearish engulfing candle on the weekly at the top of the range. Or no, that's last week's candle. We haven't opened up yet. So a bearish engulfing candle at the top of the range. You know, we didn't put one of those in this top. We didn't put one of those in on this top. Took us 2 candles to basically bearish engulf, and then we got a nice pop up. You know, kind of gapped down. So we technically didn't bearish engulf here. You know, gapped up and then sold off. So, you know, we haven't been able to get a bearish engulfing candle this whole entire run up. So is this the top? Maybe. I don't like to call, you know, the tops on this type of stuff, but you know, this looks pretty toppy to me. That looked pretty toppy before, but I wasn't expecting it. This looks pretty toppy now, but again, I'm not expecting it. A 382 retrace though is going to put us back down here. Again though, this is that, like, you know, copper is like that blue chip play. You know, silver, gold, those are like those blue chip like investments, okay? Not that and Cum Rocket are my 2 main investments right now. One of my biggest positions is Cum Rocket. Not. You better not buy Cum Rocket unless you are a fucking moron. People are so stupid. How, if you bought something called Cum Rocket, we should have like what do they call those things? Hit squad that goes around and just comes to your house and just shoots you in the face. And whoever made Cum Rocket should shoot themselves in the face. People are so fucking stupid. God. But it's not a bubble. There's no bubble. NFTs are not a bubble. Has anybody even talked about NFTs anymore? Did they go away? Fucking morons. All right, I'm jumping over in chat and then I'm getting out of here. I've never said fuck this many times in my life. Oh, all right, Bubbly says, brother, how selfish can people be? Buying toilet paper because we will run out. Imagine a shortage of what really matters. That's how I know people are stupid as fuck. And honestly, as a human race, we probably don't deserve to exist. When everything started going down and there was all this scare and everything, and people thought, you know, CVD was going to kill off 30% of the population or 3% of the population and all this stuff, and everybody's rushing out to buy toilet paper, me and my brother were literally laughing because I said, if this is really the end of the world, this is the end of everything, and, you know, we're going to have millions of people die, and this is going to be Spanish flu, and everything's crashing, and you can't figure out where to wipe your ass at, I will wipe my ass on my hand and wash my hand. I will wipe my ass on everything else in existence. You don't have paper? You don't have a... I will take the sheets off my bed and cut them up into little squares, and I will wipe my butthole on little squares of my sheet, and I will sleep directly on my mattress. I will walk outside, I will get a handful of leaves, and I will wipe my butthole on a handful of leaves. What are you going to eat, you idiots? What are you going to defend yourself with, you idiots? If the whole system is breaking down, why aren't you buying gold and silver? They're selling gold and silver while gold went down, capitulated. Silver went down to $12, and people are buying. Toilet paper went through the moon, and was sold out everywhere, and silver went down to $12. We don't deserve to exist as a race. The human race does not deserve to exist. Fucking idiots. Oh, Bubbly's also said, I'll be wiping my ass with water in my hand. Yes, thank you, sir. See, that's how I know I have the best community, because there's actual intelligent people in my community. I would rather have the smallest community on the internet full of intelligent people than a bunch of dumb fucks FOMO buying toilet paper because they're so stupid they don't know what to buy in a crisis. How about corn? How about rice? How about jugs of water? How about bullets? No, no, no. No, 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 no. We don't need that. We'll just eat the toilet paper and the shit. We don't even need toilet paper. We'll just eat the shit. And then we'll shit out the shit that you made us eat. Right? Yeah, that makes sense. Fucking idiots. Oh, my man, Trader Bill. Good to see you, Billy. Billy J in the house. Hey, legend. You're the legend, my man. Good to see you, brother. Been a while. Let's fucking go is right. Laugh out loud. Ha ha. Laughy cry face. Ha ha ha, says Bubblies. Trader Billy J said, laugh my ass off. Look, if there's one thing I know about stand-up comedy, it's always go out on a zinger. So that's enough cuss words, enough ridiculous talking shit about the human race, which will probably, probably be gone off this earth pretty soon. Well, I imagine we have enough bunkers that a couple of us will survive, but I don't think the human race honestly can survive, because I'm pretty sure that we can't binarily gender like procreate with each other. I'm pretty sure we still have to like have men fuck women and make babies using sperm and eggs, but maybe I'm wrong, so I don't know. But I mean, if you've ever saw movies like Aeon Flux, where they like create this like, I can't remember what they do, but they like inject all these people with this like serum that was like rushed ahead, and then suddenly like the world can't procreate, so they have to like figure out a way to like recycle the souls of the living into like bodies of babies that are built in the lab. I'm pretty sure if you saw like any zombie movie ever where they like rush a vaccine or like try to cure cancer, and then the vaccine doesn't work, and then everybody turns into zombies, and then the human race gets like all but wiped out, and civilization comes crashing down. I mean, if that doesn't sound like what's happening right now in our dumb fuck world that we're living in, I don't know what does. So, like I say with crypto, when we were at, going on this parabolic bull run, and I say, look, I don't know exactly where the top's going to be. I think it's going to be 64,000, but I know one thing for a fact. We're closer to the top than we are to the bottom. I think the human race is closer to the end than we are to the beginning. So I don't know how long we've been on this earth. You could argue it's, goes back to like Cro-Magnon man. Maybe it's 30,000 years. Maybe it's Neanderthals. Maybe it's 10,000 years. Maybe it's biblical times, and we're only counting like 2,000 or 3,000 years. But look, statistically, I think we're closer to the end than we are to the beginning. So I don't know if it's going to be computers, cyborgs, aliens. But look, human race is not doing well right now. Toilet paper bunker. Yes, dude. Wanted to send you an email. Yeah, man, shoot me an email. That's fine. You know where to find it at, Bill. Also, I don't know if you caught it earlier, but I am going to be reopening the group soon. So, and look, for everybody that's here right now, go back, watch the beginning of the video. Just real quick, I'm asking you guys to do a little homework. Well, I got everybody in the channel right now, whether you're watching live or you're watching this later on. I know a lot of you guys watch the full thing to the end. I don't know why. 3 hours in, 3 hours and 17 minutes in, you guys fucking, this has got to be the best TV on the internet, or best TA on the internet or something. Maybe you guys just laugh at me while you buy Shibu Inu and Cum Rocket. But the truth is, I want you guys to all do a little homework for me. Every one of you guys, whether it's a second YouTube account you have, whether it's a friend, whether it's a family member, whether you go make a second YouTube account, whether you pump it on social media, whether you tell some rando on the street and, put them in a full Nelson until they subscribe to me. I want each and every one of you guys who watches my videos. I'm assuming you guys are already subscribed. Otherwise, if you watch my videos all the time and you're not subscribed, you're a bitch. But I think that's not you guys. It's like statistically like 30% of the audience, not my true community. I want each and every one of you to go out of your way this week and get at least one other person to subscribe to my channel. I don't care who it is. I don't care if you make another account. I don't care if it's your mother, your brother, your sister, your father, your daughter, your whatever, your dog. I don't give a fuck what it is. Each and every one of you, show your support and get me one more subscriber. And if each one of you does that, it's going to show me that you guys want the group back, you want the community, you want the extra interactions. Because look, I've been free of the CVD for some time now. I've been feeling great. I'm loving the channel. I'm loving the price action. I'm feeling good. I'm ready to get it back going again. You guys know I had an issue, obviously. I did have the life-threatening CVD-19, that dirty Rona, and it was shitty. It sucked, man. I was tired all the time. I had a headache all the time. I was wheezing and getting out of breath, and I'm a physically fit dude with a six-pack, and I was literally getting out of breath, like walking from like my bathroom to my bed so that I could sleep away my headache, and it sucked. I don't blame anybody else for anything. I closed the group because I felt like shit, and it didn't feel fair to the group. And, it was the markets were just getting way too frothy, and things were getting way too ridiculous. And, it's not an excuse. I feel bad. But, I did what it did. It felt responsible of me to do that at the time. And now I'm ready to reopen the group again. I'm ready to take it to the next level. We've got the first set of courses coming. I haven't decided exactly how I'm going to do it. I think probably I will have like the first, whatever it ends up being, like however I break it down exactly, 4 to 8 lessons in the initial course is going to be free for group members. Most of you guys will probably already know that stuff, my regulars. But down the line, whatever, if I do paid for the rest of the courses or whatever, you'll get a discount. I'm not sure exactly how I'm going to do the pricing. If I'm going to do it through Patreon. I know people don't like spending their crypto, and I definitely don't want you spending it on me in a downtrend, because honestly, I don't want your dirty crypto while it's going down 90%. But whatever it is, we'll work it out, work out the details. But I'm ready to get the group back in action. I'm ready to keep rolling. I'm ready for the live personal interactions with you guys, other than how we do it right here. I'm ready for that 16 to 20 hours a day when we're cutting it up, laughing, posting funny shit in Discord. It's not for everybody, okay? If you're a little butthurt, little baby, it's not going to work for you. If you don't like when I cuss, if you don't like the charts, if you don't like me talking shit about Shiba Inu or toilet paper mongers or whatever, it's not for you. If you do, we're going to have some fun. And look, we're going to make some gains, more gains than we made last time, more gains than we ever made in the past. This is not a promise to you, okay? Because it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Guys, best community on the internet. I appreciate every fucking one of you guys. I appreciate the interactions. I appreciate the comments, the likes, the subscribes. I'm looking for the most epic subscribe spike I have ever seen on this channel. We called out the absolute top of the traditional markets when I made this fucking channel, Wyckoff distribution. I nailed it before anybody was talking about the Rona, okay? We called out absolute top, okay? Called out the 50% drop within 1%. We nailed the drop, okay? Called it out. If you don't believe me, go back and watch the Wyckoff distribution traditional market, Dow Jones Industrial or S&P video from over whatever it is at this point in time, a year and a half ago, okay? Buying Ethereum at $85, buying Litecoin at $20 and $25, buying, fucking Bitcoin at $3,000 and $4,000, okay? We called out the absolute top on crypto at $64,000 before it happened. We called out the bearish divergence. We called out the capitulation dump. I told you why day after day, week after week, within 2% of the top of a parabolic Bitcoin market bull cycle, okay? Let's get going. Let's keep crushing these fucking markets. We called out the top on Tesla. We called out the bottom on Tesla. We have nailed so many moves in these markets, all right? You stick with this community long enough, all right? Dogecoin, 4 cents. Dogecoin, 1 penny, all right? All you got to do, be a part of the community. I don't ask much from you guys, but when I do, I expect you to live up to that little bit that I do ask. And I appreciate every one of you. And together, regardless of your situation right now, regardless of your finances, regardless of your mindset, regardless of whether you are a homeowner, property owner, regardless of if you have no debt, if you have tens of thousands, hundreds of thousands in debt. Regardless of if you're a TikToking teenager or a fucking old man river Warren Buffett hanging on like Joe Biden by an inch of your life, I don't give a damn. We're going to do it together, baby. All right? If you don't have a Lambo now, let's get you one. All right? It's not a promise, but I have a feeling that we're all going to be driving Lambos. And if we're not driving Lambos 5 years from now, if we're not all buying Lambos, I will buy each and every one of you one of those little micro machine Lamborghini, the little Lamborghinis, the little micro, or not micro machine, what are they called? Matchbox cars. And I will mail it to each and every one of you. I will mail each and every one of you your own Lamborghini. And then when people say, one Lambo, you'll say, I already got mine from Crypto Trend Trader. And I'm out of here.